from some of the financials, and earnings have been okay so far. So I think this is a wait-and-see market.
Well, and wait and see whether the Fed sees anything untoward in the market, I suppose, as well, after the activity we saw last week, Alonzo. We, of course, heard from Chairman Powell himself at the Economic Club of Chicago yesterday when he was asked specifically whether or not the Fed would be looking to step in if the Fed put really exists. I'll remind our audience here how exactly that went.
Well, so some people believe the Fed will intervene if the stock market plummets, the so-called Fed put. Are they correct?
I'm going to say no with an explanation. Markets are struggling with a lot of uncertainty, and that means volatility. But having said that, markets are functioning, conditional on being in such a challenging situation. Markets are doing what they're supposed to do.
And that, of course, was the chairman of the Federal Reserve. Alonzo, we'll ask for your patience here as we're keeping an eye on the White House right now as the press is getting ready to speak with President Trump and Italian Prime Minister Giorgia Meloni after their extended lunch that went a bit over time today.
This is sure to come up, right? I know that we're talking about tariffs and the EU, specifically our relationship with Rome. But this story about the Fed chair, once we get to reporters' questions, may be in the air here. They just let the press pool, you should know, into the Oval Office. As Kayleigh mentions, they had lunch a short time ago, the Prime Minister of Italy arriving at the White House right around noontime Eastern here, and now beginning a conversation, an important one, with reporters. Let's go there live on Bloomberg TV and radio.
Fantastic job. I would say that she has taken Europe by storm. And highly respected. Everybody loves her and respects her, and I can't say that about many people. And she's become a friend, and we really have a great relationship between Italy and ourselves. And we talked about trade. We talked about many, many things during our luncheon, and she'll be saying a few words, but she's a very special person, and it's nice to have you with us. Thank you very much.
Thank you very much, Mr. President. Thank you for your warm welcome. Thank you for this occasion, which is a...
It seems we are having a bit of difficulty with the feed from the Oval Office. We'll try to get that reestablished as we were hearing the voice beginning there of the Italian Prime Minister, Giorgia Meloni, after her conversation with President Trump, in which the president just told reporters they discussed trade and other things, describing Meloni as someone who has become a friend. Let's go back to the Oval Office.
Another fight, which is the fight against the woke and ADI ideology that would like to erase our history. And as I know that we share lots of things on tackling illegal migration, on fighting against synthetic drugs. You know, Italy has been one of the nations that made a plan against fentanyl, for example. But we have been talking about many bilateral topics and things that we can do together, about defense, about economic economy, about space, about energy. Italy will have to increase its LNG imports, and also nuclear that we are trying to develop. I think there can be ways to work together, and the Italian enterprises will invest, as they've been doing for many years, as you know, in the next years. I think around 10 billion. That shows how interconnected our economies are. And that's very important, Mr. President. It's not only about Italy, it's about the entire Europe. The exchange between us is a very big one. Investments, trade, it's a topic that we are discussing in this week. But at the end of the day, look, somebody calls me, I was saying it before, such a Western nationalism. I don't know if it is the right word, but I know that when I speak about West, mainly I don't speak about a geographical space. I speak about a civilization. And I want to make, okay, between the two shores of the Atlantic. It is the time that we try to sit down and find solutions. So I want to thank President Trump for having accepted an invitation to pay an official visit to Rome in the near future, and consider possibility in that occasion to meet also with Europe the goal for me is to make the West great again. Okay, and I think we can do it together.
We can.
We will keep on work on that. I'm going to close. I want to say only, I'm proud of sitting here as Prime Minister of an Italy that today has a very good situation despite the difficulties. A stable country, reliable country, 1 million more jobs in the last 2 years and a half.
Great.
Inflation is going down, so you forgive me if I promote a bit my country, but you're a businessman and you understand me. So migration flows going down 60%. So we are trying to do our best, but I think we can do it even better together. Also on Ukraine, I will close. Together we've been defending the freedom of Ukraine. Together we can build a just and lasting peace. We support your efforts, Donald.
Good.
Thank you.
Thank you very much. And I think we're doing well in that effort, but we want to get it done, and we'll see if we can. We want to save. On average, think of it, every week 2,500 people are being killed, mostly soldiers, Russian, Ukrainian soldiers. And if we can save those lives, that would be a very good thing. And so we'll see what we can do. And I think we're getting close, but we'll let you know very soon. And you've been very helpful. I appreciate it. Thank you. Any questions?
Mr. President, how much longer does Vladimir Putin have to respond to your ceasefire proposal before you put secondary tariffs or sanctions on Russia?
We'll see what that will be. We're going to be hearing from them this week, very shortly, actually, and we'll see. But we want it to stop. We want the death and the killing to stop.
Mr. President, on Jerome Powell, you said that the termination of Jerome Powell cannot come fast enough. He says he won't leave it, even if you ask him to.
Oh, he'll leave. If I ask him to, he'll be out of there. But
do you believe
I don't think he's. I don't think he's doing the job. He's too late. Always too late. A little slow, and I'm not happy with him. I let him know it, and if I want him out, he'll be out of there real fast. Believe me. Yeah, go ahead, please. Question.
Are you trying to remove him, Mr. President?
Yeah, question.
Mr. President, yesterday Judge Boasberg, in a case against your administration, said the Constitution does not tolerate willful disobedience of judicial orders. Do you agree with that statement?
Well, you're going to have to speak to the lawyers. We have great lawyers. I can tell you this, we're doing a fantastic job of getting criminals out of this country who Biden allowed into the country. Hundreds of thousands of criminals, murderers and drug dealers. And I was elected because of the fact, I would say maybe that was the number one fact for a lot of reasons, the economy, a lot of things. But one of the primary reasons I was elected is because I said, I'm going to get the criminals that he allowed to come into our country so stupidly through open borders. I'm going to get them out. And I got a lot of votes, record-setting numbers of votes, as you know. We won everything. The popular vote, all 7 swing states, we won everything. And that's what the public wanted, and that's what I'm doing. But you have to speak to the lawyers because it's up to them.
Mr. President, what do you think of the proposal from France?
Say it.
What do you think of the proposal from France and UK of a peace mission in Ukraine with soldiers? And do you think that Italy should take part into it?
Well, I think Italy will have to make that determination, but peace missions are always good with me. I'm okay with peace missions. Yeah, please.
Mr. President, have you discussed what areas of cooperation have you discussed with the Prime Minister vis-a-vis Italy and the United States and Europe and the United States? And on China?
We discussed it very briefly. No, we're doing very well with negotiations, I think, with all countries.
Do you have a time?
And Scott could tell you a little bit, but we are doing very well. We have a lot of countries that want to make a deal. Frankly, they want to make deals more than I do. Go ahead, Scott. Would you say something, please?
Yeah, we've got a process in place. We're working on the big 15 economies first. We had a fantastic meeting with Japan yesterday. I believe they've been called with the EU already. And then we have South Korea coming in next week. And I believe India is also talking, that's moving very quickly.
Go ahead.
Ukraine's President Zelensky has said he has evidence that China is supplying weaponry or ammunition to Russia. Do you have any evidence along those lines? And also, he said we could see a minerals deal signed this week. Is that?
Well, we have a minerals deal, which I guess is going to be signed on Thursday, Scott, next Thursday. soon. And I assume they're going to live up to the deal, so we'll see. But we have a deal on that. No, I have no comment on that. I have no idea. That's his statement, not mine.
Mr. President, there were reports that you waved off an Israeli attack on Iranian nuclear facilities. Can you comment on that? Is that accurate?
And they say the attack is what?
That you waved off an Israeli plan to attack Iranian nuclear facilities.
I wouldn't say waved off. I'm not in a rush to do it because I think that Iran has a chance to have a great country and to live happily without death. And I'd like to see that. That's my first option. If there's a second option, I think it would be very bad for Iran. And I think Iran is wanting to talk. I hope they're wanting to talk. It's going to be very good for them if they do. And I'd like to see Iran thrive in the future, do fantastically well. I know the Iranian people, they're incredible people. Always have been very smart, very energetic, very successful people. And I don't want to do anything that's going to hurt anybody. I really don't. But Iran can't have a nuclear weapon. It's, pretty simple. It's really simple. We're not looking to take their industry. We're not looking to take their land. All we're saying is you can't have a nuclear weapon. The deal that was made with Obama, that deal would have expired already. It was a terrible deal. It would have expired. And that gave them a clear path to a nuclear weapon. I wouldn't have accepted. That's why I terminated the deal. Number one, it was way too short. When countries are involved, you don't make short-term deals. These are countries with long lives. And I terminated that. And it was a great termination because it didn't allow us to do anything. Once it terminated, you know what the deal was. It was a terrible deal. Really, one of many terrible deals made by the U.S. But no, I'd like to see Iran thrive. And they can do that, I think, very easily, or they can do it the other way. And the other way is not going to be good for them. It's going to be really bad for them. Well, Jensen's an amazing guy. He's become a friend of mine, and I don't know, he's a person that's very proud of our country. He loves our country. I'm not worried about Jensen at all.
Mr. President, if our court holds you in contempt, will you take steps to return Kilmar Abrego Garcia to the United States and put him in front of a judge?
Well, I'm not involved in it. I'm going to respond by saying you'll have to speak to the lawyers, the DOJ. I've heard many things about him, and we'll have to find out what the truth is. But I will say this, we were inundated by millions of people, many millions of people during the Biden administration. They say 21 million. And a big percentage of those are criminals, serious criminals. I'm not saying just criminals because they came into the border illegally. I'm saying they're criminals at the highest level, murderers. Many of those people murdered more than one person, and they're on the loose. And I was elected to get rid of those criminals, to get them out of our country, or to put them away, but to get them out of our country. And I don't see how judges can take that authority away from a president. We've done an amazing job, Tom Homan, Kristi Noem. We have done an amazing job. Nobody can believe the job we've done. Far greater than what I said. I mean, I got elected on that, but we've done much better. We have right now 99% border. It's a 99%. Nobody thought that would even be, but nobody's coming through our border practically. 2 weeks ago, we had 9 people come through, all for medical reasons. We allowed them. We brought them through because one had a heart attack, one had something else, and all for medical reasons. We have a great border. We had a great border 4 years ago, but we have a border now that's even tighter, and we did that in a matter of weeks. And no, we have to. We need to get murderers and drug dealers and people that were in jail for horrible. They released jails, Georgia, from all over the world, and released them, not just South America, all over the world, the Congo and Africa. Many, many people come from the Congo. I don't know what that is, but they came from the Congo. And all over the world they came in, opened their jails. Venezuela, practically all of their prisoners released into our country. And we took them because we had an incompetent administration called the Biden administration. And to think what they've done to our country. And I was elected to straighten that out, and I'm doing that. But we have activist judges that don't want murderers to be sent out of our country. They don't want killers and drug dealers and drug lords and people from mental institutions. They want them to stay in our country, I guess. I don't know, maybe that's the liberal way, or as they call it nowadays, the progressive way. But I don't think it's the way that our country believes, and that's why I won in a landslide.
Mr. President, you did say that you are confident these deals will be done, but you also said that you're in no rush. Americans are seeing prices rise. They're seeing it on their bills. How long can they expect that pain to last?
So they've already seen it get much better, because if you were truthful, which you're not, you know, I know you very well, you have gasoline that hit $1.98 yesterday in a couple of states. You have gasoline's way down. The price of oil has dropped substantially. The price of groceries are substantially down. The price of eggs, you know, when I came in, they hit me with eggs. I just got there. I was here for 1 week, and they started screaming at me, eggs have gone through the roof. I said, I just got here. I was there for 7 days, and I hear that eggs have gone through the roof before I got there. And they were screaming at me, the press, the fake news, like you're fake. And the fake news is screaming at me, like, about eggs. I said, I've only been here, this is my 7th day. And they were right. They went up 87%, and you couldn't get them. They said, you won't have eggs for Easter, which is coming up. Happy Easter, everybody. You won't have eggs for Easter. And we did an unbelievable job, and now eggs are all over the place, and the price went down 92%. And our Commissioner of Agriculture, Brooke, has done a fantastic job. Literally done a fantastic job. So prices haven't gone up. The only thing that's gone up, actually, is interest rates, because we have a Federal Reserve Chairman that is playing politics. Somebody that I've never been very fond of, actually. But he's playing politics. Interest rates should be down now. They should be coming down. In Europe, as you know, they reduced them, I guess 7 times. It looks like they're going to reduce them again and again and again. But our guy wants to play cute. But interest rates are pretty much even. Maybe they went up just a slight bit, but that's the only thing. But that's because of the Federal Reserve, because they're not very smart people.
Do you regret nominating him?
Go ahead, yes, sir, please. Go ahead, please.
Do you regret nominating him, Jerome Powell?
Look, in the first 4 years, we had the greatest economy in the history of our country. Stock market went up 88 points. I think he's terrible, but I can't complain because we had the most successful administration economically in the history of our country. I think we're going to do even better this time, because you will see that the numbers that we're taking in are astronomical. We're taking in tremendous amounts of money with the tariffs. We were treated very unfairly on trade, and countries are having a hard time getting used to the fact that they can't do that to us anymore, because we have a real president. We have a president that understands what it's all about. We had presidents that, in some cases, were smart, but they didn't understand business, or they didn't like business, or, you know, it wasn't like a priority. And then you had, like, the last administration, the only thing they were good at was cheating in elections. That's about all they could do. They couldn't do anything. They were useless. They were incompetent. Worst administration in the history of our country. Worse than Jimmy Carter. Jimmy Carter died a happy man. You know why? Because he wasn't the worst president. Joe Biden was. So I think you're going to see some fantastic numbers when this all happens. It's happening now. I mean, everybody wants to make a deal. And if they don't want to make a deal, we'll make the deal for them. Because that's what's going to happen. We'll just say, this is what it is. But we want to listen to everybody. And I think I can say for Scott and the other people that are working on it that we're listening, and we're going to be very fair to people. But, you know, we're the one that really sets the deal, and that's what we'll be doing. Okay? Go ahead, please.
Question to our Prime Minister.
Oh, you have a great Prime Minister. You're so lucky. Yes.
In Italiano.
Oh, yes, that's right.
Okay.
I'm not sure they do agree.
Presidente Meloni, volevo sapere cosa pensava del fatto che il Presidente Trump ha considerato responsabile Zelensky della guerra in Ucraina e poi se avete parlato delle spese militari e qual è il limite massimo a cui ha detto che può arrivare l'Italia, le percentuali delle spese militari.
Non abbiamo parlato dei limiti massimi a cui può arrivare l'Italia, abbiamo parlato del fatto che l'Italia sta... perché arriverà al prossimo vertice della NATO con il 2% che era già previsto, che è stato sottoscritto dai governi precedenti, perché siamo una nazione seria, ma non abbiamo parlato poi di quanto vada aumentata questa percentuale, anche se siamo ovviamente consapevoli che insomma il tema della difesa sia un tema particolare.
All right, folks, you are listening to President Trump there from the Oval Office, along there with the Prime Minister of Italy, Meloni. Of course, they're making some comments coming off of their meeting, but we should point out that the president taking an array of questions on a variety of things. Welcome, everyone. This is Bloomberg Business Week Daily. On this Thursday, Carol Massar, Tim Stanovic, the president talking about a minerals deal. He expects it to be done, and he talked about also doing well with trade negotiations with all countries.
Yeah, trade certainly came up. Also coming up, though, the Federal Reserve and the chairman of the Federal Reserve, Jay Powell, he said that, quote, Powell is terrible and the Federal Reserve, quote, are not very smart people. He blames the Federal Reserve for interest rates and cites European interest rates going down, saying interest rates should be going down here in the U.S. He also said that Powell is playing politics.
Yeah, and if I want Powell out, he'll be out of there. We are monitoring, looking to see if the president resumes speaking. He is. Let's go back to the White House.
No, wait. I want to hear what you said. Go ahead.
Prime Minister Meloni was asked what she thinks about the fact that President Trump holds Zelensky responsible for the war in Ukraine. And Prime Minister Meloni answered, well, actually, we have and also if you talked about the military spending, and the raising of the military spending, and the first thing Prime Minister Meloni said is that no, actually we didn't talk about the raise in military spending. Of course, Italy will keep its commitments with 2%, and then we will see, because we are absolutely aware of the fact that it is very important
well, I will do
defense
that.
is very important.
Wait, I will do that. Important. They've been asking if we decided another percentage about the defense spendings, and I said yes, NATO, and I said that Italy is reaching the 2% as it was already decided. We didn't speak about a specific other percentage, but we are aware of the fact that defense is important for the future, and we see what also the work that we are trying to do at the European level.
And I don't hold Zelensky responsible, but I'm not exactly thrilled with the fact that that war started. That was a war that would have never started if I were president. You'd have millions of people living right now that are dead. You'd have cities that would be open and thriving, and they'd have their beautiful turrets. Those turrets are the most beautiful in the world, but they're not with us any longer. They're smashed to smithereens, laying on the ground in a million pieces, getting hit by rockets, bombs, and bullets. And so I'm not happy with him, and I'm not happy with anybody involved. I think it's a war. I know it's a war. It didn't happen for 4 years. It was never close to happening. It was never even a thought. And I spoke to President Putin about it a lot. It was the apple of his eye, but there's no way he would have ever gone in if I were president. Now I'm trying to get him to stop because, as you know, Russia's a lot bigger. It's a bigger military force. And if you're smart, you don't go involved and get involved in wars that you can blame the man that was sitting in this seat. Biden, he didn't know what the hell was going on. But I can guarantee you that, and everybody agrees to it, if I were president, that war would have never taken place. I'm not blaming him. But what I am saying is that I wouldn't say he's done the greatest job. Okay? I'm not a big fan. I really am. I'm not a big fan.
Go ahead.
Presidente Meloni, avete discusso di Cina, della possibilità che l'Europa ponga dei dazi, diciamo, sulla Cina. Mr. President, are you sure about the definition of
All right, everybody. Once again, you are listening to and watching a live press conference with President Trump and the Italian Prime Minister Meloni. They had a meeting, making some comments about that meeting. But at the moment, of course, both officials taking some questions from reporters in the room, and that includes some that are in Italian. So we just wanted to kind of pop out for you. But they have covered some things. Certainly the president talking about the Fed chair, also talking about a possible minerals deal. And he just made some comments about the war between Russia and Ukraine, saying, I don't hold President Zelensky responsible for the war, but he said, I'm not happy with him. He also said, I'm not happy with anybody involved in the war in Ukraine. But he says, Tim, and I thought this was kind of big, I'm trying now to get President Putin of Russia to stop.
Yeah, again, we're monitoring comments from the White House. Prime Minister Giorgia Meloni of Italy with President Donald Trump. We're getting questions in English and in Italian. When we get them in Italian, we come and talk to you because, well, we can't speak Italian and we can't translate it for you. I do want to bring you some of those comments, though, that we did get, specifically with regard to a mineral deal. We got this just about 12 minutes ago. The president saying that a mineral deals will be signed next Thursday. Other questions he was asked about included NVIDIA. He said that he's not worried about NVIDIA's Jensen Huang, and he said Jensen is a friend of mine.
Yeah, also commenting, going back to Fed Chair Jay Powell, something we hope to talk about in the next hour with you. But President Trump saying interest rates should be coming down now at this point. So again, continuing to monitor questions between the two, and we'll continue to bring you any headlines as they are known. Once again, welcome everybody. This is Bloomberg Business Week Daily. Carol Massar along with Tim Stenovic on this Thursday, April 17th, last trading day of the holiday shortened week. We do want to bring in one of the co-hosts of Balance of Power, that is Joe Matthew, just to weigh in on some of the thoughts that we are hearing from the president. Joe, interesting. We're hearing about the Fed chair. We're talking about maybe trade deals. There's a lot going on there in the Oval Office, continuing to.
Yeah, it's an important meeting here, to be honest. Obviously, the first European leader to drop into the Oval here since the reciprocal tariffs were paused. And we know they have a great relationship. President Trump, as they walked into lunch, called her one of the great world leaders. He's called her a wonderful woman and a real live wire. So we know they get along. The question is, can she do anything on behalf of the EU instead of specifically her own country of Italy, though there is going to be a formal visit by President Trump. He accepted her invitation to go to Rome. We're listening for Powell remarks here more than anything, right? He'll leave if I ask him to. He'll be out of here is the direct quote. I'm not happy with him. It's funny, he just said that about Zelensky. Quote, if I want him out, he'll be out of there real fast, believe me, unquote. That's President Trump's adding to his post on Truth Social earlier today when it comes to Jay Powell. But you guys know how this works. There's a big question about whether he has the authority to do that.
Yeah, we're going to be speaking with Mike McKee in just a minute, getting some details about these latest comments coming from the president. Some additional comments, Joe. As you mentioned, the president blaming the Federal Reserve for interest rates. He cited European interest rates going down. He said interest rates should be going down. And he said that Powell is playing politics here. The Fed chair is playing politics. I do want to go back to something you said, though, and it was the idea of a prime minister of a European country coming to negotiate on behalf of that country while being part of the European Union. Is that something we're going to see more of? Heads of state in the European Union making their way to Washington to try to negotiate on behalf of their country rather than the entire EU as a bloc.
That's true. The answer is let's see how it goes today, right? There's a big question about why the president is not reaching out to Ursula von der Leyen. Why is he sitting down with the prime minister of Italy? And it comes down to relationships. It's pretty clear that von der Leyen would love to be here having this conversation right now, but maybe Giorgia Meloni can help to bridge the gap. While we were talking, the president just referred to Europeans as parasites. All right, that's the starting line for this conversation today, knowing that these reciprocal tariffs are paused for a couple of more weeks or months. July 9 is when they're coming. So if she walks out of there with a deal, let's say carve-outs for wine, cars, cheese, and pasta, you better believe there'll be a line at the West Wing with every other European leader looking to do the same starting tomorrow.
And I'll be lining up as well to make some purchases. No, having said that,
we just have to go to the store.
We do. Hey, Joe, as I continue to track the headlines, as do you, the president was asked whether the prime minister of Italy changed his mind on tariffs, and he said no. He said the tariffs are making us rich. I want to ask you, what is the intel that you're hearing from the White House in terms of movement on tariffs? Because initially we thought nothing was going to change, and then he gave us this pause. So we do know that things can change and they are fluid. But I'm just curious what's going on inside the White House right now.
Well, I'd point you back to what Scott Bessent said. He's sitting on the couch right next to them. And he mentioned earlier that they're starting with the top 15 world economies and that they are making progress. President Trump was boasting on Truth Social about popping into a meeting with Japanese leaders yesterday. The delegation was here to talk about a trade deal. Doing the same with Italy now. They've reached out to the UK. So I think the idea is that it'll be piecemeal. There will be deals. Maybe they're announced before July 9. We don't know anything about that or the timeline on all of this. The question is, I think, to what Tim was getting to, do we have a splintering of the EU with nation-by-nation deals, or is he going to deal with the bloc? Because the reciprocal tariffs are against the European Union. Whether these individual companies can wiggle out of that is the big question.
And some would say that the U.S. should really align with the European bloc, especially when it comes to dealing with China. So TBD, we'll keep an eye on this. Joe, thank you so much. Another busy week, even though it's shortened. Joe Matthew, he'll be back with Kelly Lyons. They're coming your way back at 5 p.m. Wall Street time on Balance of Power. We want to stay with the future of Jay Powell. Of course, the Fed chair, things have just come out of this press conference that is ongoing here in the White House. Again, the president making another comment. He should do the rate cuts. So we want to kind of get into this, and we have a great voice.
We do. Let's bring in Katerina Saraiva. She joins us from Houston. Also with us is Michael McKee. He's Bloomberg News International Economics and Policy Correspondent. He joins us here in the studio. Mike, I do want to start with you because you have been monitoring these these Trump comments, I should say, in the context of what we heard from Jay Powell yesterday. You were there in Chicago. Just give me your impression of what we're hearing from the president right now and what the message is that he has for the Federal Reserve.
At the moment, I'm still seeing this as saber rattling, trying to influence the Fed. The president said this morning he used the word termination. Other White House officials have told other networks that he didn't mean firing him. And then today in the Oval Office, they said, "Are you trying to get rid of him?" And he said, "Yeah."
Yeah.
But what does that really mean? We know he doesn't like Powell, and we know he doesn't like the fact that the Fed is not cutting interest rates as the president would like. But there isn't there's a real debate about whether the president has any power to get rid of the Fed chair, which we can go into later. But I don't think that we're necessarily any closer to Powell being ousted or an attempt to oust him by the president. But I think that because Powell spoke yesterday and gave the impression they're not going to cut rates soon, that he's just venting again on the Fed chair.
I mean, you can't fire a Fed chair just because you don't like their policy, can you?
Well...
Is that cause? I don't know. Is that cause?
Like I said, we can't go into the whole background, but in theory, legal experts say that's not cause. Cause is malfeasance or illegality or something like that. The question is not so much cause, it's this whole Article 2 issue about whether the president has unfettered ability to run everything in the executive branch, including what are supposed to be independent agencies.
Well, and to that, there are some legal actions that are out there that are testing the limits of presidential authority to remove agency officials without cause. I want to just bring in Bloomberg News Federal Reserve reporter Katerina Saraiva, who's with us from Houston. Katerina, what do we know about these cases and what it could possibly, potentially, I want to be careful here, but what it could mean in terms of the presidential authority to possibly get rid of the Fed chair?
Yeah, I mean, that's how, as Mike was just saying, the big question. So we have a couple cases that have kind of filtered their way through the federal court system and are expected to be taken up by the Supreme Court soon. So these are kind of, they both have to do with what's called Humphrey's executor, which is a provision from 1935, a Supreme Court ruling that found that the president could not unilaterally fire members of boards. Now, the Supreme Court has already chipped away at that a little bit. There was a 2020 decision about the CFPB that said when it's a single director, the president does have that authority to fire that person. But the open question is kind of how it applies still to multi-member boards. So the decisions going up to the the cases going up to the Supreme Court now are not specifically about the Federal Reserve. It's other government agencies, but it's a similar structure where they have multiple people on the board.
You know, Katerina, we're monitoring what's going on in the Oval Office right now. The president is with Giorgia Meloni, the prime minister of Italy. He's still making more comments. Just as you were speaking about the Federal Reserve, he said interest rates are pretty flat. They should be better. Costs are down, very little inflation. The Fed owes it to Americans to get interest rates down. Powell will have a lot of political pressure, and the only thing Powell is good for is lowering rates. I want to go back to Mike McKee, international economics and policy correspondent. He's here in our studio, too. He's looking at these comments as well. Just fact check us a little bit with where inflation is, where costs are, and how you view the comments that the president said the only thing Powell is good for is lowering rates.
Well, it depends on which measure you want to use. As always, we say with the inflation numbers, but basically they're getting very close to the Fed's target, the CPI down. And now we're here, after we've had the other numbers and people have plugged in the data, the Fed's target is the PCE index, and that's now forecast to come in at about 2.3%. So inflation has come down. The issue is not that inflation is coming down, because if this were an ordinary time, the Fed would be probably lining up to cut rates again. I think pretty much all of them want to, but they can't because they don't know what is going to happen. And this may be what set the president off, Powell, yesterday, saying that the tariffs, as announced, were bigger than people thought, and they will have a bigger impact than people thought. Inflation will probably go higher than we estimated. And in that case, because that's a possibility, the Fed doesn't want to move right now, and that makes sense.
So he also said, the president, if Europe has cut rates, that puts us at a disadvantage.
They're not comparable. The European economy is growing barely 1%. We've been growing 2.5% or better. But first quarter may not be great, but there may be some statistical anomalies there. Their unemployment rate is much higher than ours, and their interest rates are lower than ours. So at this point, you can't really say that it's a comparable situation.
And we should point out that the remarks and the press event in the Oval Office has ended, so that should be the end of those headlines. Katerina, I want to go back to you for one more thought. I mean, so legally, I mean, how easy would it be potentially, and I guess depending on how all these rulings go, could it be for the president to maybe remove Fed Chair Jay Powell?
Yeah, I mean, if the rulings are broad and not very narrow, right? If they are seen to apply to basically any multi-member agency, then yeah, that leaves the door wide open for the president to fire the Fed chair. There are some legal scholars and some folks, and we heard it from Chair Powell yesterday as well, that think that there is likely to be a carve out specifically for the Fed. We have heard, we've in a decision a few years ago, Justice Alito kind of alluded, talked a little bit about how the Federal Reserve is a unique entity. So there might be appetite for that at the Supreme Court to kind of carve out the Fed, but it remains to be seen. Now, I think one of the important factors for Trump, even if he has the permission to do so, is the reality of how the markets would react, right? Because it would be quite a reaction in markets, and that may prevent them from ultimately acting.
All right. Really appreciate you weighing in. Katerina, we're going to let you go. Thank you so much, though. Katerina Saraiva, she is Bloomberg News Federal Reserve reporter. We're going to continue, though, a little bit more with Mike in terms of Fed Chair Jay Powell and his tenure.
Yeah, so Mike, I do want to bring you back in here because, and we're going to get to trade in just a minute because there were some headlines on the trade side of things coming from that Oval Office meeting. But if we think about this in the context of what we heard from the president in his first term, he would tweet at the time about the Fed lowering interest rates. The Fed chair has, in the past, addressed questions about pressure and political pressure. He's talked about maintaining independence. As of now, though, given what we heard from the president today, are there any more questions about the pressure that he must be feeling or he may be feeling?
Well, he may be feeling pressure, but he is giving the same answer. It was asked yesterday, and again, he said, we will do what we do without any regard to political pressure. Our job is the mandate that Congress gave us, maximum employment and stable prices, and that's what we're going to do. We'll make our decisions based on what gets us to those mandates.
Fed Chair Jay Powell also said yesterday, our independence is a matter of law. Congress has it in our statute. We're not removable except for cause. We serve very long terms, seemingly endless terms, he said. So we're protected in the law. So, you know, Congress could change that law, but I don't think there's any danger of that. That independence has pretty broad support across both political parties. I'm going to ask the obvious. I know the answer, but we've got to ask it. Maybe for those who are like, well, couldn't he just get rid of the Fed? I mean, if President Trump just got rid of Fed Chair Jay Powell just kind of because he wanted to, and there was no real cause, what would that say potentially to the independence of the Fed? And again, remind us why having an independent Fed is crucial. And when it doesn't happen, we see what happens to countries.
That part is easy because there have been many, many studies that show countries with independent central banks have much lower interest rates, much lower inflation rates, and it's just overall better for the economy. And there's no debate among economists or, I think, investors, Wall Street, global Wall Street kind of people about that. Now, if the president tried to fire Powell, I think there would be a rebellion on Wall Street. Krishna Guha of ISI Evercore said today, if you like the reaction to the tariff announcement, just wait till you get a Trump is fired announcement.
You're saying the bond market could get yippee?
Yeah, they could get
on steroids, right?
Okay. It's a kind of a technical term, but yeah.
Okay, that's good to know. Mike, one last question to you, this one on trade, because we did hear the president and prime minister, the president just now, saying that they discussed trade, other things, and that Italy will have to increase their imports of LNG. Remind us, because the European Union is this bloc, remind us if individual countries can actually go and negotiate their own trade deals with the U.S., or do they have to do it as the EU?
Well, they have to do it as an EU, as the EU, as a bloc to negotiate a trade agreement. Now, there's no reason that Italy couldn't buy more of one product. They could say, we want more LNG. We saw that during the initial phase of the Ukrainian war. Countries that needed natural gas buying more from the United States and other places. But the idea of an overall trade deal that would exempt them from tariffs probably has to go through Brussels. I mean, that's the structure they have set up.
All right, we're going to leave it there. Great timing. Thanks for dropping by.
See, the president knows when I'm here to make
You coordinate schedules, right?
5 o'clock, balance of power.
5 o'clock, balance of power.
That's when we'll see you next.
We'll talk about it again.
That's when we'll see you next.
Michael McKee, international economics and policy correspondent, Bloomberg News. A couple legal actions we want to get to right now. First of all, earlier today, Google partially losing a U.S. advertising tech antitrust case. And just moments ago, the U.S. Supreme Court saying it will hear arguments on President Trump's bid to start enforcing an executive order that would restrict automatic birthright citizenship and upend a long-standing constitutional right. The court saying today it will keep his restrictions on hold in advance of that May 15th argument.
I want to bring in Bloomberg News legal team leader Sarah Forden. Sarah joins us from our Washington, D.C. bureau. I want to start with the Supreme Court setting to hear arguments in the birthright citizenship case. How does this work? Give us the sort of Schoolhouse Rock version of how the Supreme Court could change what is written in the U.S. Constitution.
Well, I mean, this has been, as you said, a long-standing belief of constitutional scholars and others that the right to birthright citizenship is sacrosanct. So the fact that they are willing to take this up and to start to parse it and consider the restrictions that are being proposed by the Trump administration means that this right could potentially be in play going forward.
So what's next? May 15th? Is that what we focus on?
So as you said, the restrictions are on hold for now, but May 15th will be a closely followed arguments. This usually takes several hours where we listen attentively to what each of the justices, the questions that they're asking and how that might indicate what their thinking is.
I mean, this would be a significant change in a policy that's been standing.
Yeah, I mean, this has been sacrosanct that the children of people who are non-citizens who are born in this country have the right to American citizenship. So this will go to, hospitals across the country when babies are born. Are they going to give those babies a social security number or not? And so this could start to roll back that, and it's part of the Trump administration's larger, very aggressive crackdown on immigration to this country over multiple cases.
What is the legal case here? Because in the Section 1 of the 14th Amendment of the Constitution, it does go into the fact that all persons born or naturalized in the U.S. are subject to the jurisdiction thereof are citizens of the U.S. and the state wherein they reside. Is the Supreme Court challenging the meaning of that?
That clause, subject to the jurisdiction thereof, is the one that is being put into question, and the question is whether these non-citizens who are here are really subject to the jurisdiction, and so that is what they're going to tease out in part during these arguments.
So I am curious.
What
did you just ask?
I'm
sorry. There's a lot of stuff happening.
Yeah, producers are talking to Carol, so I'm jumping in a little bit. I was asking specifically about Section 1 of the 14th Amendment and how that is open to interpretation with this legal case.
Sorry, it's one of those kind of days and kind of these weeks and one of these kind of years. I want to flip to Google and the case there of Google partially losing a U.S. advertising tech antitrust case. This was a federal judge finding Google to have illegally monopolize some online ad technology markets in a blow to what is a really key part of Google's business. Walk us through this one.
Yeah, absolutely. This is the second major ruling against Google in a tech antitrust case. And this case has to do with the pipeline that underpins Google's advertising business. So they control the technology soup to nuts, from the ad servers to the putting these ads on websites. And this judge found that Google monopolizes the part that has to do with the ad server tools. And I know this is all very wonky, but it goes back to their acquisition of a company called DoubleClick in 2008.
That was so long ago. That was so long ago.
So the DOJ actually is in the remedy portion of this case, which will follow today's decision, is DOJ is asking for the judge to order Google to sell off that DoubleClick unit.
It's unbelievable,
but of course, over the years, it has been integrated into their business, and so it's kind of like trying to unscramble the omelet.
So is there an appeal coming? Should we assume?
So
Can
yes, Google has already said they will appeal this part of the case. They did win the part of the case that has to do with display ads, so they're safe on that count. But all of this marks a bigger reckoning for the tech companies that have gotten so powerful, and it shows that we have a rare little spot of bipartisan consensus on antitrust and limiting the power of big tech, because these cases have been taken forward both by the first Trump administration, who filed the first Google case, which was about search, and the Meta case, which is currently playing out in another D.C. courtroom. And they were carried forward by the Biden administration. So we're not seeing a lot of light between conservatives and liberals on these cases.
Just real quickly, just about 20 seconds here, Sarah. So that's what I was going to ask, because we know this was a kind of second major blow to Google that was already found to have monopolized the online search market in a separate case. Is this all Google specific, or I kind of get the feeling it's a larger message here for some of those big tech guys? Just quickly.
This is a larger message, and we have cases running now against Amazon, Meta, Apple, and Google. So it's broad.
All right.
I'm just thinking, are those CEOs of those companies were all at the inauguration?
Yeah.
I think they were.
I believe they were.
Yeah, just making sure.
Yeah, it's working out well.
Cool.
All right, Bloomberg News legal team leader Sarah Forden, thank you so much. We really appreciate you joining us. Let's get another check on the markets.
Yeah, let's look at what's going on with the markets. The S&P 500 up right now by close to 0.9%. The NASDAQ is higher right now by 0.5 percentage point. The Dow right now is lower by 0.7%, and that's because of United Healthcare.
Yeah, but definitely off our worst levels of the session. We saw the Dow earlier negative, so interesting to see kind of what we're seeing. So not as bad. S&P 500, folks, most names are higher. 439 to the upside, 64 to the downside. All right, now we want to get to a story that definitely caught our attention and a stock that's definitely on the move, and we are talking about Eli Lilly. This stock surging after data showed its experimental weight loss pill worked as well as the Ozempic shot, bringing it one step closer for developing a needle-free alternative. So let's get the details from Bloomberg News healthcare reporter Damien Gardier, who's here in studio. Damien, good to have you here. Off and running, shares of Eli Lilly. I think it's the top gainer in the S&P 500, up something like 16% right now.
Which is a massive gain. I mean, just to note, this is already a very expensive stock. Lilly has flirted with becoming the first $1 trillion drug company in market cap, which I don't think they're there yet, basically based on the theory that they can corner the market by consistently kind of out-innovating themselves in the race for these hot obesity medicines that everybody talks about. So to the news today, they had pivotal data from a late-stage study showing that their pill, an oral treatment, looks like it works about as well as the injectable Ozempic made by its rival Novo Nordisk, at least in patients who have type 2 diabetes. And this was closely watched because despite it being a relatively smaller study and it being diabetes and not obesity, everybody is looking at the read-through of what is the weight loss number. And if this is a pill that you take once a day,
hallelujah,
that can do what a weekly injection can do, that is, again, like a holy grail product in this market.
A couple things. You said it's not yet a $1 trillion company. They want to be. It's $811 billion. That's the market cap right now. Today's move higher, a whopping 16%. A pill versus an injection. And look, I don't like needles. A lot of people don't like needles. Paul Sweeney was on earlier today talking on Bloomberg Intelligence, talking on surveillance. He says he's administered this shot. He says it's no big deal. His question was more about, what about side effects here? That seems to be more of a barrier, at least in his experience.
That's true. So for people who can get over the needle aspect, which is definitely true for people who have type 2 diabetes, and we're finding out based on the demand for these medicines that it's true for people who want to lose weight as well. The side effect issue is all gastrointestinal, or at least those are the most common and the most vexing for people. So looking, and again, this is something scientists say never to do, and do it anyway, a cross-trial comparison, which is looking at Lilly's data and comparing it to what we saw with Ozempic's published data. I would say they're relatively comparable. The rates of, you're talking about vomiting, diarrhea, I apologize, maybe this is not the tone we usually shoot for on this show, and nausea. In some cases, they were a little higher with Lilly's pill. In some cases, they were higher with the injections. But I think the reaction right now is that they look pretty similar. But I guess that could end up being the barrier in the future if and when this product is approved and we kind of remove the needle aspect. It's, are you comfortable being one of the 10 to 15% of people who experience those side effects. I see.
Because I know of people who've like moved around because they have really bad side effects from certain drugs. They're not necessarily apples to apples. There's some variances. I mean, Novo's down about 7%. Should Novo be worried?
Yes, I mean, there's an argument that, so Lilly and Novo have been the two giants of this market, Novo being based in Denmark, Lilly being based in Indiana, and they've both been focused on diabetes for, I mean, in Lilly's case, more than 100 years, dating back to like the initial synthesis of insulin. And so they've been fighting one another in this place for basically the entirety of their corporate histories. These data today and Lilly's trajectory, maybe this is unfair, but it feels like they have kind of outgamed Novo in this market. Novo obviously has, you know, the major product in the form of Ozempic, but Lilly has an injectable medicine that works a little bit better than Ozempic and now appears to be knocking on the door of having a pill.
What's the next, you know, when we think about pipelines, this stuff takes years. That's why the startup biotech companies are so volatile. If we're thinking about the pipeline, a pill is sort of the next iteration. That's the golden goose. That's what people are going for. What's next after that?
So it's interesting because everybody has kind of differentiated.
You just breathe in. You spray something and just go. No, I'm just kidding.
You know, that's
a mist would not be so bad.
It's not impossible, I think, scientifically as well. But barring the, you know, aerosolization of GLP-1 medicines, which I don't think we're there yet.
Okay.
So both Lilly and Novo and a few other companies, including AstraZeneca, are kind of moving in parallel tracks where there is the move to develop oral medicines that might lead to a little less weight loss but would be more accessible and more able to produce and cheap to produce. And then there's a next generation of injectables that appear to, at least so far, have even stronger effects on body weight. So 20 to 25% body weight loss versus the smaller numbers we see. And the theory is that by, let's say, the end of the decade, if all these things work, it would be kind of like an armamentarium for people looking for treatments. For people who have obesity such that losing 25% of their body weight is medically necessary for their health, you would have the kind of like big guns, this is all a little crude, but the more efficacious injectable treatments. And then for people for whom a smaller percentage body weight treatment is more desirable, or who perhaps just need to maintain loss that they got from one of those drugs, you would have the pills.
So kind of a menu of drugs, right?
Exactly.
Essentially. Hey, Eli Lilly is the top gainer in the S&P 500. United Health is the top decliner. I've got to ask, stock's down like 23% here. They cut its annual forecast and reported its first earnings miss in over a decade. What do we need to know about this? Is this also an industry-wide problem because it dragged down the group today?
It does seem like it. The word ominous has been invoked a few times. Now, United Health is difficult to cross-cut because they are this like octopus of healthcare. They do everything short of develop their own medicines. But in terms of insurance, managed care, they are a, arguably kind of monopolistic
supermarket
concern.
of health,
And so, but in that sense, they are perceived as a bellwether. So they report earnings. They have this unforeseen issue with their profitability relating to Medicare Advantage, which is sort of a supplementary insurance program. And I think part of the ominous nature of that is the thing they're suffering from is from basically a government crackdown on how Medicare Advantage works that began last year. And you might think that that would alleviate under a new administration, but Dr. Oz, Mehmet Oz, who is stepping into the role of leading the federal agency that runs Medicare, was very fiery in his Senate confirmation hearing about exactly this issue. And so I think some of the stock reaction is not just the shock of, as you mentioned, the superlative of United missing earnings for the first time in a decade, but also that like the storm clouds seem to just still be on the horizon.
Yeah, storm clouds over another industry, like is what it kind of feels like. What?
He can talk about anything.
I know.
Damien Gardet can talk about anything.
I know.
It's like he's been writing about Lilly all day, and you throw him the United Health question, and he knocks it out of the park.
Thank you so much.
Anytime I can talk about Dr. Oz.
Thanks for joining us.
Bloomberg News healthcare reporter Damien Gardet. Let's get another update on the trade today, folks. Our last trading day of the week. For that, we turn things over to Amy Moore. She's in for Charlie Pellet. Hey, Amy.
Hey, Carol, we are checking the markets for you. We do it all day long here at Bloomberg. The S&P 500 up 45 points, NASDAQ up 81 points, and the Dow is down 273 points. Bond markets, by the way, closed early today. The 10-year Treasury yield at 4.32%, the 2-year yield at 3.79%. Double-digit sell-off in United Health Group. You guys were just talking about it. That's what's dragging down the Dow, pushing it toward a day of historical underperformance. United Health cut its annual forecast, reporting its first earnings miss in more than a decade, causing shares across the insurance industry to tumble. Shares of United Health right now down 23%. Studies show Eli Lilly's experimental weight loss pill works as well as the Ozempic shot, at least in a trial. That brings it closer to developing a needle-free alternative. Shares of Eli Lilly jumping 17% at this hour. Google was found by a federal judge to have illegally monopolized some online advertising technology markets. That's a blow to a key part of that company's business. It is the second major blow to Google, already found to have monopolized the online search market in a separate case. So this could increase the odds that Google will be forced to dismantle much of its ad tech business. We're watching that for you. We're also watching shares of Alphabet down now about 1%. And also in national news, a suspect's been taken into police custody. At least 6 people are reported hurt now in a mass shooting at Florida State University in Tallahassee. The extent of the victim's injuries not immediately known. No additional details about the person who is now in custody. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Carol Masser and Tim Stenovec.
And it's a busy Business Week daily.
Yeah, I thought everybody was on vacation.
I thought, well, this will be a mellow day. All right, Netflix is reporting after the close. It won't be mellow after the closing bell. Right now, stock is up just shy of 2%. The stock also popped yesterday. Was it yesterday? No, it was actually down.
A couple days ago, yeah.
A couple days ago. Yeah, it was up about 5%. We did have the Wall Street Journal coming out talking about Netflix aiming to double its revenue, triple its operating income by 2030, fueled by both user growth and ad revenue. Analysts are saying such targets are achievable. And the stock, it's up about 9% year to date.
All right, well, with what to watch out for when we do get those numbers right at 4 o'clock. And the fundamental outlook for the company, we've got Geetha Ranganathan. She's Bloomberg Intelligence Senior Industry Analyst. She covers media. She joins us from Princeton, New Jersey. Geetha, I just want to start with the basic question about where Netflix is in an environment where the market is so concerned about tariffs and trade policy. Is this a company that is totally insulated from all of that?
pretty insulated. I don't know if it's totally immune, but definitely insulated because they have great content. They have this really good competitive moat, and it's just the model, Tim. It's a subscription-heavy model, so very limited exposure to advertising. In fact, in 2024, we estimate it was only about 3 or 4% of their total revenue. So definitely insulated in a very big way. And even if we think about, people pulling back on spending, we've always seen that TV and, streaming services have actually held up pretty well in a recessionary environment. So we think Netflix actually becomes a pretty cheap form of entertainment, even if you go for like the $25 plan, that's less than $1 a day. So we actually think they're actually in a pretty good position, even in a recessionary environment.
Okay, that makes sense. I'm going to let Carol jump in 1 second. Sorry, I'm hogging this, Carol.
It's Geeta.
I know.
You know how much I adore.
I know. What happens, though, when a company that does advertise says, wait a second, we got to pull back on our spend? Do they pull back on advertising with Netflix?
So that, so advertising is still a very small part of the pie, Tim and Carol. So it's, as I just said, it's less than 5% of revenue. Yes, they are looking to build it out in a big way. They did say that they would look to make this about double from last year to this year, but then really take off in a big way starting in 2026. Yes, there are, concerns, but also you have to remember that Netflix has tremendous brand value, and the programming that they're going to probably put on their platform and where they're going to charge top dollar to advertisers, that's going to be programming that really attracts a lot of eyeballs, whether it's an NFL game, whether it's the Jake Paul, Mike Tyson, whether it's the WWE programming, so Raw programming. It's just all of this content that is going to get a lot of eyeballs, and we think advertisers will still be willing to pay up, even though you're absolutely right, advertising is the first sector to generally experience this pullback, when you have this recessionary environment.
All right, so you are the BI senior analyst for U.S. media. I mean, is this the media company to beat? Is this the streaming company to beat? Is this what everybody kind of looks at and their metrics?
Absolutely. So this is, Carol, this is the first time that they're not going to be reporting actually subscriber numbers. So it's going to be a whole new world. But they are kind of getting into, more of the financial targets, more into engagement. And that's really where all of these media companies want to go. They want to be able to, show that top line growth driven by pricing power, which is exactly what Netflix is doing. And at the end of the day, expanding profit metrics. So we saw Netflix actually expand operating margin last year by 600 basis points. And if you just look at, you mentioned those 2030 targets of tripling their operating income, which would essentially be $30 billion by 2030. If you just kind of work out the math, we're looking at operating margin of 40%, which is more than a traditional media company. So this is absolutely where everybody wants to be.
Yeah, those are pretty nice margins. All right, Geeta, I know it's a busy day for you. Thanks so much for checking in. Geeta Ranganathan, Bloomberg Intelligence, senior analyst for U.S. media, joining us. And of course, Netflix, the focus after the close. Right now, though, we got to talk about autos.
Yeah, because the global auto market continues to navigate a tariff war, a trade war, call it what you will. Our Bloomberg Intelligence team noting that the big three Detroit automakers, Ford, GM, and Stellantis, may face up to $42 billion in tariff expense. That's according to the Center for Automotive Research, or about 2x their expected net profits.
All right, there's so much going on. We knew we wanted to check in with Bloomberg's Hannah Elliott. She's got her pulse on the global auto market, especially the high-end, the luxury end, I should say, but really all of it. She is Bloomberg Pursuit's auto columnist, co-host of the Hot Pursuit podcast right here at Bloomberg. She does that with Matt Miller. You can find it at Bloomberg.com or wherever you get your podcasts. She's here in studio, normally on the West Coast. Here, so wanted to talk with you because just what does it feel like out there right now with tariffs? You do play a lot in the higher end, cover a lot of what's going on. I mean, are they immune, or are folks?
In a word, chaos. Chaos is not too strong a word. And I've been talking with a lot of different automakers, from Ferrari to Mercedes to BMW to Porsche to Cadillac very recently, and they all are doing something different. They're all saying, for instance, Mercedes, we had Dimitri Silakis in the studio yesterday. He said they're considering moving more production of their vehicles in the U.S. Of course, they've been producing in the U.S. since the 90s. They could bring more production into the U.S. They might also eliminate some of their lower-end cars to try to sell the cars that are more profitable, which are the trucks and the SUVs. Then you've got Porsche, which is increasing shipments to the U.S. in a hurry to try to beat tariffs that may take effect later.
Yeah.
Of course, we're in a 90-day pause right now. And then you've got Audi and Jaguar that have paused shipments. You've got Tesla, which has paused imports to China. So everyone's reacting very differently.
You focus,
it's chaotic.
anyone who follows you knows you tend to focus on the higher end of autos.
Yes.
Is there more pricing power for those automakers to just eat the tariffs and pass them onto their customers? I mean, in some cases, you're waiting years for a vehicle.
Yes, to some extent. For instance, Ferrari has said they are going to increase the price of their cars in the U.S. 10% across the board.
That's fine, right?
And no one's going to really blink.
Okay.
In fact, that actually makes the Ferraris higher status vehicles, because now when you know, well, that person could afford the tariff. So, that's one thing. Mercedes has said they're going to keep the prices the same on all of their cars in the U.S. for the calendar year. So they obviously feel a little bit less eager to pass on the price to their customers. But again, to your point, it also depends on the car. Someone who's going to buy a really high-end G-Wagon or Ferrari is probably a lot happier or okay eating some of that cost rather than someone who's going to buy an entry-level.
So we've done a bunch of stories, and we've heard from folks, in our auto team as well, that people have been out there buying cars. You have
my
sister who bought. We all know people. Is it the same in the high-end side of things?
Or
not as much?
Yes, to some extent. What I'm really hearing, interestingly, anecdotally, is that dealers are calling people asking to buy back their used car.
Really?
Because that's where the opportunity lays. Yeah, when you have a used, like a 2022, like our colleague Keel Porter wrote a piece about this. He bought a Honda CR-V. This isn't a high-end car, but he bought a Honda CR-V in 2022. The dealer called and said, "Can I buy it back from you? Because we can obviously sell it."
But then he's going to need a new car.
Exactly, and he didn't end up doing the deal in the end. Now, luxury is a little bit different, but not really that much different. Average transaction prices are down slightly in the past month, and which is good.
Yeah.
And that applies to used and to new cars.
Okay, so Carol and I, before you go, we're stuck in the studio. You live this life of luxury where you travel around the world and you drive cars everywhere. It's pretty cool. One thing we've been obsessed with over the past couple of weeks is trying to understand the EV opportunity in China and what these Chinese companies are doing, because we cannot drive these here in the U.S. Have you seen these? Have you had any experience in Europe driving these around or other parts of the world?
I've seen them on the road in Europe. Sadly, I have not driven one yet. And let's ship this to my editor right now, because I've been really begging to get over there. Because to your point, it's a massive, massive indicator of how automakers that sell in the U.S. are going to treat U.S. consumers, because they're being influenced by China. And what it has to do with the EVs. Obviously, China has figured out how to make affordable, highly advanced vehicles that they're selling everywhere else in the world except for here.
I was going to say, you don't have to go to Europe to do it. You could go to Mexico and drive a BYD.
Completely. Everyone is acutely aware of that. China was a really hard market for every luxury automaker last year, because the Chinese consumer realized we don't have to buy these expensive European products. We can buy our own domestic stuff. And it's just as good, if not better.
Yeah, I mean, we're just kind of fascinated with this and trying to get as much information.
Me too.
We're going to talk to your editor. Give us the name, because we want you to drive it and we want you to report back. Hannah, thank you so much.
Thanks, guys.
Hannah Elliott, she is auto columnist at Bloomberg Pursuits right here in studio. All right, folks, that's going to do it for this hour of Bloomberg Business Week Daily.
Oh, no, there's more.
I know. Coming up next on television is the
there's
close.
more with us.
Oh, wait, we're not done.
Oh, we're not done, Carol. Don't go anywhere. Do not go anywhere, because we've got stocks that are on the move coming up in just a minute, and there are plenty on the move.
It just feels like it should be done.
It's also Thursday,
Don't you feel
not
like
Friday.
we should be
I know
going
it feels
home?
like Friday.
All right, stick around. We got another block.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, you are listening and watching Bloomberg Business Week Daily. Carol Masser, Tim Stenovec live here in our New York studio. We do want to point out a little news alert crossing the Bloomberg. This is coming from the Wall Street Journal. It says President Trump has for months privately discussed firing Fed Chair Jay Powell. According to people familiar with the matter, he hasn't made a final decision about whether to try to oust him before his term ends next year. It ends, I believe, in May of next year. But interesting, it's something we talked about certainly with our team and our Mike McKee at the top of the hour.
Yeah, the Journal reporting that in meetings at the private club Mar-a-Lago, the president has spoken with Kevin Warsh, the former Fed governor, about potentially firing Powell before his term ends and possibly selecting Warsh to be his replacement. We'll bring you any updates as we do get them.
Yeah, no idea, but we are seeing stocks roll over a little bit once again, still up about 40 points, up almost 0.8% on the S&P 500. Dow down again, down about 300 points, 0.75% to the downside. It's been down all day. NASDAQ 100 just up about 98 points, and Tim, that's good for a gain of about 0.5%.
Well, let's take a look at some stocks on the move this week. We've got a Bloomberg News managing editor for Markets Live, Christina Kino, here in the Bloomberg Business Week studio. What is on your radar?
Well, I'm looking at United Health, Tim. I mean, that is a historic decline, down more than 23% at the moment, the most in 26 years in 1998. And its value wiped by $115 billion. That's because it's
massive.
It's massive, yeah. That's a big loser today, for sure.
Yeah, biggest decliner in the S&P 500. Keep going. It's something we've been talking about certainly on this Thursday.
Yes, exactly. And, you know, it is all due to its annual forecast cut and the fact that it reported its first earnings miss in more than a decade. And even its CEO, Andrew Whitty, saying that the performance was, quote, frankly, unusual and unacceptable. President Trump name-checking United Health as well earlier in comments
on Thursday afternoon. The Dow down 345 points, 0.9%. The S&P 500 is higher and the NASDAQ is higher, so he does have a point. If you're just looking at the Dow.
Yes, specifically at the Dow, then.
Yeah, it's 7% of the Dow Jones Industrial Average. So when it tanks, it's going to pull down the index. Where do you want to go next?
Well, let's talk about Eli Lilly. In terms of the big gainers today, that's up more than 16%, primarily because of a study showing that its experimental pill potentially creating a rival for Ozempic. In trials, some very promising results there. Though we still have a ways to go. Its main obesity trial won't wrap until at least July. So that's the main one to watch out for in terms of whether it will be a viable competitor to Ozempic.
It's kind of like the holy grail, I feel like, for GLP-1, right? That you can take a pill, pop a pill in rather than take a shot.
Yeah, certainly a lot easier, yeah.
I stay away from needles, just so you know.
I don't like pills.
Yeah,
I'm not a pill
No
taker.
way.
I could never be a druggie because I can't take pills.
Pills are easy compared to shots. You got to do a shot?
I couldn't do pills either. That's why I want the, you spray it in the air.
Yeah, okay.
You go after it. A global payments company and the global payments area is certainly on our radar, too.
Yes, absolutely. Quite an interesting story because it's an M&A story, right? The first one in a while that we've seen is basically Global Payments acquiring WorldPay for more than $24 billion from FIS and GTC are very divided in terms of the reaction. FIS investors really liking that. That's up nearly 10% on the day. Global Payments, meanwhile, falling more than 15%. So, yeah, and the reaction to that deal, quite mixed. Bloomberg Intelligence saying that the purchase will allow Global Payments to beef up its scale, but then some analysts on the street saying it's going to take some time for this deal to create shareholder value.
Interesting.
That one wasn't even on my radar today.
I think what's interesting is that there's actually a deal that was done.
Yeah, I mean, this unlocks quite the logjam that we've had. We've had a quiet M&A market up until we got this deal, and it's quite a blockbuster deal. $24 billion. That's not nothing.
Yeah, so pretty interesting to see a little bit of that, especially coming off of all the bank earnings where there's kind of we're waiting. Pipelines might be there, but not ready to pull the trigger and do it.
I'm just waiting for Netflix later.
I know you are.
Yeah, you know that.
Yeah.
Hey, Bloomberg News managing editor for Markets Live, Christina Kino, joining us in the studio. For more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts.
You mentioned Netflix. It's up about 1.5% here ahead of its earnings. We'll be breaking them down after the closing bell. It's really been an outperformer this year. It's up about 9.5% year to date. So we'll see what kind of numbers we will get. I just want to go back to how we started the hour. We were obviously in a press conference from the Oval Office. The president took some questions where he was asked about, Fed Chair Jay Powell, and he said he wasn't happy with Powell. He doesn't think the Fed chair was doing the job. He talked about thinking interest rates should be lower. And then we've got a journal story that's just come out.
Yeah, the Wall Street Journal reporting that for months, President Trump has privately discussed firing the Fed chair. I'm going to read from this story at the Journal. In meetings at the president's private Florida club, Mar-a-Lago, Trump has spoken with Kevin Warsh, a former Fed governor, about potentially firing Powell before his term ends and possibly selecting Warsh to be his replacement, the People said.
Yeah, kind of interesting, certainly, and top of mind here when it comes to the Fed chair.
I should note, Warsh has advised against firing Powell and has argued that he should let the Fed chair complete his term without interference.
The U.S. Treasury Secretary has consistently pushed back against Trump advisors who want to replace Jay Powell as well. We're talking about Scott Bessent. All right, it's a busy Thursday. Do not go anywhere. The close coming your way on TV. Tim and I continuing on Bloomberg Business Week Daily.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Linda Kenyon. A suspect is in custody after a shooting at Florida State University. Several people are injured. Blake Leonard is a student at that school.
I didn't physically see a shooter or anybody get shot. I just heard the shots pretty close to me and saw people running, so I was trying to get out of there too.
CBS's Scott McFarland says this is no isolated incident.
These incidents continue to recur in Florida, and we know from our CBS News reporting just down the street in Tallahassee this week, the state legislature was considering legislation to pull back some gun control measures in Florida.
Michael Price's daughter is a student at FSU.
We can't be a country that love our children and the citizens and continue to have the kind of gun policies we do. And I know everyone's going to say, no, don't rush to gun policy. Maybe some mental issues here or something, but we got to do something about that.
Price's daughter was not injured. The U.S. Supreme Court has agreed to hear arguments next month on President Trump's restriction on birthright citizenship. The president had issued an executive order to end birthright citizenship for children of those who are in the U.S. illegally, but that order remains on hold. States, immigrants, and rights groups have sued over the issue. President Trump has been displeased with Federal Reserve Board Chairman Jerome Powell, who said the president's trade tariffs are highly likely to generate at least a temporary rise in inflation.
I don't think he's doing the job. He's too late, always too late, a little slow, and I'm not happy with him.
The president also saying Powell has not been aggressive enough to cut interest rates, adding his termination cannot come fast enough, while James Sample, a professor of constitutional law at Hofstra Law School, says Trump's comments are unprecedented.
No president in American history has ever tried to remove a member of the Federal Reserve's board, let alone the chairman.
Powell's term as head of the independent agency does not expire until May of 2026. The lights are slowly coming back on as crews work to restore power after a blackout in Puerto Rico yesterday that left 1.4 million people in the dark and 328,000 with no running water. CBS's Manuel Bajorges is in San Juan.
Luma, the utility here, says that within 48 hours, they hope to have 90% of customers with their power restored. We're heading into the busy Easter weekend, which is a big deal here in this largely Catholic island.
This is the second island-wide blackout in less than 4 months. The cause not yet known, but Puerto Rico has had chronic outages due to hurricane damage. This is CBS News. Eli Lilly says a clinical trial of its new weight loss pill has been a success. CBS's Michael Wallace has the details.
Lilly already makes the injectable weight loss drug Zepbound and Mounjaro. Its new daily pill works similarly with similar results.
About 16 pounds by the end of the trial on average. Okay. After about 40 weeks.
CBS News medical contributor and editor-at-large for public health at KFF Health News, Dr. Celine Gounder, says if future trials go well, the pill could become available next year.
Lilly has already stockpiled over 1 billion pills of this new pill in advance of the demand.
Michael Wallace, CBS News.
United Health leaders say the use of the plan from people enrolled in Medicare Advantage has increased at twice the rate than expected. So the healthcare giant is chopping its previous earnings forecast. The CEO says the overall market performance is what he called, frankly, unusual and unacceptable. Linda Kenyon, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
So now are we done?
What do you mean? No. The answer to your question in a word is no. Not even close.
Oh my God. Do you all feel this way? I feel this way. It's been quite a week.
It's Thursday, Carol.
It is
Thursday. It's not Friday. It feels like Friday. Hey, guess what? The bond
market tomorrow.
The bond market's not even open anymore. They're done.
I know. They're done.
At 2.
Getting ready for the long holiday weekend.
What's your plan?
Getting ready for the long holiday weekend.
You're not. You've been so busy. You don't even know what's going on tomorrow.
I just
you truly don't.
I want to be off the clock. Apparently, I was off the clock in the last hour. I'm just going to say, hey, folks, we are less than an hour away from the closing bell, getting ready to wrap up the holiday shortened trading week. It is Good Friday, of course, tomorrow, so no trading. Looking at a mixed trade. United Health really dragging down the Dow. It's down about 1%. S&P up about 0.5%, and the Nasdaq 100 up 0.2%.
Yeah, everything is kind of flat, or I should say, off our best levels of the day, off our worst levels of the day as well. But look, a sort of difference between what's happening in the Dow versus the S&P because of the United Health dragging down the Dow.
It's like we're waiting and seeing, waiting for something.
Yeah, we're going to have much more on the trade in just a moment when Amy Morris checks in with us. First, though, a little preview of what we have coming up over the next couple of hours. We are going to a deep dive when it comes to semis. Our senior semiconductor analyst, we're putting our chips on the table, Carol, after a week that has seen lots of news and some really wild swings in stock prices.
And a bunch of news overnight and into Thursday. So we're going to talk about that. Tariffs, once again, front and center. You know that. A fast-moving story. We get headlines about what's going on with the negotiations. We heard from the president last hour in that press conference with the Prime Minister of Italy, Prime Minister Meloni. So we're going to talk to the president of a company at the center of a trade war, manufacturing. I'm just curious what he's going to have to say about his environment and his outlook.
All that and more coming up over the next 2 hours on Bloomberg Business Week Daily. First up, a check on the day's trade and top business stories. Here's Amy Morris in for Charlie Pellet. Hey, Amy.
Hey, Tim. U.S. stocks rose after President Trump mentioned a potential trade deal with the European Union. We do check markets for you all day long here at Bloomberg. The S&P 500 now up about 0.5%. NASDAQ up about 0.1%. The Dow, though, still down about 1%. That is because of United Healthcare shares going down as well. The 10-year Treasury yield at 4.32% and the 2-year yield at 3.79%. And yes, as you mentioned, the bond markets closed around 2 o'clock this afternoon for the long holiday weekend. Google was found by a federal judge to have illegally monopolized some online advertising technology markets. It is a blow to a key part of the company's business, and the ruling is the second blow to the embattled tech giant, already found to have monopolized the online search market in a separate case. Jennifer Ray is Bloomberg Intelligence Senior Litigation Analyst.
I don't think that in the search case, which has a remedy hearing starting Monday, Google will be forced to sell Chrome, and I don't actually believe in this ad tech case that they'll be forced to sell off the ad server or the ad exchange. The remedy hearings will take place, decision will be made, and at that point, Google will appeal.
Bloomberg Intelligence Senior Litigation Analyst Jennifer Ray. Shares of Google parent Alphabet down just about 1%. And Hertz shares are 40% higher again today. That is on top of yesterday's record 56% rally after Pershing Square disclosed it bought 12.7 million shares valued at about $46.5 million at the time of purchase. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Carol Masser and Tim Stinovak.
Thanks so much for that update, Amy. Do appreciate it. Well, as I mentioned, we're putting our chips on the table this afternoon, and we're talking semis. TSMC kept its bullish outlook for growth in 2025 after reporting strong first quarter results. Separately, the company's CEO said TSMC isn't engaged in discussions to form a venture or share its tech with any company, essentially dismissing the speculation that TSMC is negotiating a tie-up of some sort with Intel. For more, let's bring in Kunjan Sabani, Bloomberg Intelligence Senior Semiconductor Analyst. He joins us from our San Francisco bureau. Kunjan, I want to talk first about the earnings that we got from TSMC. It's essentially saying, hey, we're confident that we can ride out this trade war between the U.S. and China.
Yeah, I mean, when you look at the two key points which they mentioned, what's driving the growth was on the 3 and 5 nanometers. So that's essentially smartphones, and a lot of that is the AI high performance compute, right? And we have said that we think the AI semis are going to be the most resilient when it comes to tariff impact. So not a lot of surprise there. The better numbers were slightly positive. That could be related to some demand pull-in. However, when folks asked them that question, they didn't give any direct answer or a clear indication that there is some kind of demand pulling happening.
So everything's good if TSMC, though, says it's bullish for growth in 2025. Can we sit back and say, what do we have to worry about?
Well, if we were just following that one metric, yes. But I think this earnings seasons, if we continue to hear the same kind of language and tone from everyone, then yes. But it's too soon.
Yeah, and I will point out that shares of TSM sees ADRs, which were up as much as 4% or almost 4% today, just up about 0.7%. So it's not like they're off and running. And the SOX, the Philadelphia Semiconductor Index, is actually down 0.6%. Hey, one thing I want to also talk to you about is TSMC and Intel.
Yeah.
So
Intel shares are down 1.4%.
So what's up with that? The back and forth, it feels like, on this story.
Well, this is the first time either of the company has publicly, officially addressed this, right? So far, you could say that it was all rumors or speculation. And I'm not surprised to hear what they said because, that kind of a JV would be really difficult to pull off. When we look at TSMC's perspective, that doesn't seem to be a lot of high ROI or a lot of motivation on then doing this kind of a JV. It would have definitely helped Intel near term, but again, from a long-term perspective, I don't know if Intel would want this kind of a partnership with their closest competitor.
Okay, we got a lot of stories to get to, so we're kind of doing a lightning round here. Carol reminding me about this. A lot of happening today.
There's a lot to keep.
Jensen heading to Beijing today. This was shortly after the Trump administration barred the company from selling its H20 AI chip to China. Was this planned? Do we know if this was like a planned visit ahead of time? Was this like an emergency visit? How are you looking at it?
The timing would indicate that this seems like an emergency visit. I mean, look, this is not the first time their chips have been banned, right? And every time the chips get banned, they come out with a newer China-compliant version, which does better in terms of dollar terms every time. So not surprising at all.
But it's not... Okay, we talked a little bit about this yesterday and the news that we got yesterday. $5.5 billion, it seems like a lot. But we're talking NVIDIA here, so they're going to take a $5.5 billion charge as a result of what we learned yesterday. What could Jensen actually do on the ground in China to address this?
Well, I think, not sure from a political angle, but at least from the demand health check perspective, he can sort of figure out what the new China compliant chip would be, what's an appetite, right? What the competition and pricing point would be to sort of determine how to now strategically get ahead of this hurdle.
One thing I think is so interesting, Tim and I are kind of obsessed with a couple different podcasts, and I think there are views that in terms of this trade war, tariff war, especially between the U.S. and China, it seems like it really just comes down to, in a big way, those two countries, that it might be smarter that rather than to be so kind of fighting with each other, or so it seems, that better to work with one another. And on that, you did see Jensen apparently meet with DeepSeek founder Liang Wenfeng, and forgive me if I've mispronounced. This is coming from the FT. It's citing unidentified sources. NVIDIA's declining to comment. But, you know, if he did indeed meet with DeepSeek, I don't know. How do you think about that? Smart on his part because he's thinking about business and making sure he's kind of involved with everybody who might possibly need or want his chips?
Yeah, if you put the geopolitics and national agenda aside for businesses, for not just for NVIDIA, for most AI semi businesses, it would be good for business to have an open border relationship with China. It's the second largest buyer or the second largest market, right? So almost doubles, if not increases, the TAM for them if they were allowed to freely sell into China. And if China embraced the US AI semi technology, it would increase the TAM almost by 50%, all the way to like 100%. So definitely good for business for these companies.
Hey, before we move on, because we have more stories we want to get to, we should note our team at Bloomberg News reporting that the timing of the trip was unusual, though, according to a social media account affiliated with the state-run China Central Television, Jensen showed up to the Capitol at the invitation of a domestic trade group, though it's unclear what event he was attending. He did ditch his trademark black leather jacket for a suit and tie, though.
Ooh, kind of getting spiffier there.
Yeah.
All right, where do you want to go next?
I kind of want to talk about what happened with the House yesterday, Carol.
Yeah, this is interesting. And there was a story that a House panel is calling DeepSeek a risk. A bipartisan House committee saying Chinese AI firm DeepSeek is a profound threat to U.S. national security, citing its ties to Chinese government interests and alleged circumvention of U.S. export controls. And Kunjan, committee is urging NVIDIA to hand over information on sales of chips that DeepSeek may have used to develop its chatbot model, which allegedly siphons data back to China and relies on a model that censors and manipulates information. So again, some of our reporting here. Help me unpack that one and what that could mean for NVIDIA and just the U.S. government getting, kind of deep in the weeds here with some of the U.S. chip companies.
Yeah, I mean, there's a lot of layers to this. I don't know how straightforward it will be. It's not NVIDIA is directly selling to DeepSeek. There could be a lot of players in between where NVIDIA could or could not even have control on how the chips end up at DeepSeek. Now, to point out there where China compliant NVIDIA chips being shipped to China at that time. So that's what the company has said, that the chips that were used were compliant. But again, there's a lot of layers. The worst case scenario here could be more stricter sanctions, right? Like the government can put like sanctions on all chips going to China or certain companies and impacting the ability for NVIDIA to ship into China even more further.
Kunjan, in your view, look, you're an analyst, so I can ask you these questions, and it's not a political question, but it's a question about the whole point of curbing shipments of the most advanced semiconductors. The idea would be to not give a certain country access to certain capabilities, but doesn't that just provide an incentive for the country to build it on their own?
It does, and I don't want to get political, right? But look, every country is going to utilize its strengths. U.S. strengths here comes in hardware and semiconductors. So, they are looking after their interest in blocking that. That does motivate China to sort of beef up its weakness, which is not in the semis and the hardware, but their strengths comes around software and creative frameworks and algorithms, right? Which they have done and showed that with DeepSeek with using less powerful hardware. So every country is going to try to use their strengths and sort of beef up their weaknesses.
All right, good stuff. I know we've been leaning on you a bunch this week. We really appreciate it. Obviously, a really important sector in terms of the market and really the outlook for what has been a big, big move, certainly the AI trade, and just so important to the outlook. Kunjan, thank you so much. Kunjan Subani, Bloomberg Intelligence Senior Semiconductor Analyst, joining us from our San Francisco Bureau. All right, folks, we are looking at a market, little change, just a little higher on the S&P, down on the Dow and the NASDAQ 100.
It's 3:21 on Wall Street. I'm Amy Morris. Stocks resumed its advance, led by energy companies. Oil approaching $65 a barrel. Traders held off from making any big bets after President Trump expressed his disappointment in Fed Chair Jay Powell. We do check markets for you all day long. At Bloomberg, the S&P 500 now up about 0.2%, but the Nasdaq is now down 0.3%, and the Dow down 1.3%. The 10-year Treasury yield at 4.32%, and the 2-year yield at 3.79%. A reminder that the bond markets closed at 2 this afternoon for the long holiday weekend. President Trump says a trade deal with the European Union is possible. That did move stocks higher, including oil. WTI now more than 3% higher, and Brent crude now 2.8% higher. The European Union is working on a proposal to introduce restrictions on some exports to the U.S. as a possible retaliatory tactic in the trade war initiated by President Trump. Sources tell Bloomberg the restrictions would be used as a deterrent and only if negotiations with the U.S. fail to produce a satisfactory outcome. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Masser and Tim Stenovec.
Amy, thanks so much for the update. Do appreciate it. Well, President Donald Trump said during a meeting with Italian Prime Minister Giorgia Meloni that he expects to reach a trade deal with the EU, but he indicated he's in no hurry to finalize tariff agreements.
We're doing very well with negotiations, I think, with all countries. And Scott could tell you a little bit, but we are doing very well. We have a lot of countries that want to make a deal. Frankly, they want to make deals more than I do. Tariffs are making us rich.
Well, that was President Trump from the Oval Office alongside Italian Prime Minister Giorgia Meloni. The Scott, by the way, he referred to was Scott Bessent, the Treasury Secretary of the U.S. Separately, well, not separately, but also, I should say, the EU, Carol, is working on a proposal to introduce restrictions on some exports to the U.S. as a possible retaliatory tactic in that expansive trade war that the president initiated last month.
All right, for the latest, let's head to Stephanie Lai. She's Bloomberg News White House correspondent. She is out there in our D.C. bureau. Hey, Stephanie, so I just want to cut to the chase. Are things moving forward when it comes to trade negotiations? And should we assume sooner rather than later that there could be some kind of deals, better deals, maybe perhaps announced that maybe kind of cool the heat that we've seen in what feels like a trade war?
Yeah, I mean, I think that's what we've all been waiting for, but it remains unseen when a deal will come together. You know, they've mentioned for a couple of, I guess, about a week now that they have about 15 or so offers and that there are people coming to the White House to make deals. You know, notably, nothing really came out of the Japan talks yesterday. Now, it was a preliminary meeting, sure, but the president still did attend. And so everything we've been hearing from our sources, from just what's coming out of the White House, is that deals are being made, that they're not really in a rush, and Trump himself is saying, you know, repeatedly in the last week that he really doesn't mind waiting because we're bringing in a bunch of revenue and money from these exports or the imports that we're putting tariffs on. And so he doesn't seem to be in a rush. It seems like his team is very focused on making good deals. But, you know, one thing that the Treasury Secretary Bessent mentioned at this Oval meeting was that South Korea is expected to come next week. So we're still seeing some trade partners come in. Discussions are still happening, but in terms of the timing, it doesn't quite seem like an immediate remedy.
Okay, South Korea, Japan.
Something's missing.
Yeah, I was going to say. And then Italy, of course. What about the big one? What about China? Is there any movement there?
Yeah, I mean, reporters did press the president on this throughout this last week. He doesn't seem to say that he has reached out. It's not clear if China has reached out. And so it doesn't really seem like we've moved from this impasse that we've already encountered earlier last week when the tariffs had started ramping up and this trade war continued to escalate.
All right, going to leave it there. Hey, Stephanie, thank you so much. Stephanie Lai, Bloomberg News White House correspondent, joining us from our Washington, D.C. bureau.
So that is the latest when it comes to D.C. and the trade war. We're also really interested in how companies that import goods are dealing with this. The Natori Company is one of those firms that's really caught in the crosshairs right now. It's a designer fashion brand that does sleepwear, lingerie, swimwear, fragrance, bridal, fine jewelry, and more. We've got Ken Natori with us. He's the president. We should note that before his work at Natori, he worked here at Bloomberg Radio and TV. That was until 2003. He joins us here in the Bloomberg Interactive Brokers studio. Good to see you, Ken. You are the perfect guy to talk to about this because of what is happening in your world. And I want to know what is happening in your world because you manufacture in China, you manufacture in the Philippines. What's going on?
It is, first off, thanks for having me. Always great to be back at Bloomberg. Feels like I'm coming back home. It's really challenging right now. There's just not a lot of visibility in terms of what stuff is going to be like. Obviously, we had the chaos of the beginning of the month. There was a time where we thought places outside of China would be really difficult to manufacture in because the tariffs in Vietnam, Cambodia were much higher than expected. Then those came down to 10%. China went even higher. So, we've got plans for every different scenario, but we don't know what the scenario is actually going to be. So it's really hard. I think a lot of people in our industry have just been waiting a little bit to see how things would shake out. But we're all in a position now where we have to make decisions, and it's hard to make decisions without visibility.
Yeah, no, absolutely. What's the best and worst case scenarios that you are kind of planning for?
So we thought the worst case, we have our own manufacturing facility, our own factory in the Philippines, where we do about 70% of our manufacturing of the collections that we do in-house. So that is a tremendous advantage. That said, we still have 25 to 30% exposure in China, which is a lot. We have been building models for 25% out of China, 45% tariffs out of China, 145%. Yesterday, there was a rumor of going up to 245%, which, how do you plan a business around that? And what's interesting for us is, we sell direct to consumer on Notori.com, but we also sell to department stores, our wholesale partners that we've been with, throughout our 48 years as a company.
Right.
And we've got these long-term partnerships. They need to know, what are we going to buy product at? And we have to they're asking for a price, and we don't know what the tariff is going to be when we ship in 60 to 90 days. So there's so much uncertainty. We're working very closely with our retail partners to come up with some way for us both to be protected, because we have great partnerships, but with a complete lack of visibility in terms of what those tariffs are actually going to be, it's a little bit of a guessing game at this point. But everybody has to start taking action, and that's where it gets a little scary.
The president would say the point of these tariffs are to bring manufacturing back to the United States. Is there a number that you'd see on China or the Philippines that would cause you to move production to the U.S.?
I will say, if tariffs stay at 145% out of China, people will not be able to import apparel from China. It's going to move. Who knows what it's going to be in the other countries. If he puts 145% tariff on every single country in the world, then eventually, maybe apparel manufacturing could come back to the United States, but that's a long process. That doesn't happen overnight.
How long is that process?
I don't know. I've never thought that we would have to invest in our own manufacturing facilities in the Philippines.
There's a facility you could just say, okay, guys, you start making it.
And it's not the facility; it's also the skills. Think about training workers. How many people do you know in the U.S. who are oh yeah, I know how to do that? It's about training a workforce. It's about equipment. It's about machinery. So in theory, yeah, I'd love to bring jobs back to the U.S. But right now, people are how are you dealing with this? If I sat in my desk and called every manufacturer in the U.S. that could make apparel for us, that would take 0 seconds, because I don't have any of those contacts, right?
Wow.
They just they don't exist for us now.
Yeah.
That's not just could it happen down the road? We could come up with any kind of scenario, but as of right now, what we're supposed to do in our seat, it's a little confusing.
How much would it cost, do you think?
I don't. So
is the world just a fantasy at this point because the skills don't exist here in the U.S., the manufacturing doesn't exist here in the U.S.? Is my question even relevant?
So it could be relevant to bigger companies, and I think you've seen articles where this is really going to hurt smaller companies, the independent companies like us. If you're a bigger company, if you want to go tell Nike or Under Armour or Victoria's Secret, hey, you guys build your own manufacturing in the U.S. Well, maybe they have the money to do that and the ability to we're a privately held business. The idea of hey, we're actually going to invest in building our own manufacturing facilities in the U.S. That's very difficult, and it's not like there are these existing factories that we can tap into to move to domestic production.
What don't we, maybe as a society, understand about Chinese manufacturing? I think we think maybe we think of our history, dirty factories, industrial factories, you know what I mean? And just but they're very sophisticated. Tell us a little bit about your experience in terms of China. I'm assuming you've visited your factories?
Of course, yeah, of course. So, I spent a lot of time at our own company-owned factory in the Philippines, but I have traveled to China a lot from 2015 to 2020, obviously to meet with our manufacturing partners there. They are very good. They're very dedicated, and they know what they're doing, and they're willing to do the work. And this is, it's tough work to do. It is tough work to do. So
how sophisticated is the technology involved in all of this?
So it depends. For apparel, everything. There's certain parts of making clothes that can be machine done. Like if you look at socks or hosiery, that's usually like machines and people looking at and operating the machines and observing them. But when it comes to actual like apparel manufacturing, like the cut and sew, that involves a lot of handwork. That involves sort of detailed work. Using a sewing machine, and it's hard work. I'm not sure, like to get those skills in the U.S. and to have legitimate apparel manufacturing and real factories. It would take a long time of training a workforce and a long time of building these facilities. So
I want to go back to what you're doing right now, because you essentially described a state of paralysis where you really are waiting to see what the decision is or how long these tariffs are in place to make a decision. How long can you actually wait? Because at a certain point, you're going to have to make a decision, and your partners are going to have to get their clothes, and you're going to have to tell the folks in China and the Philippines to start making these things.
Yeah, so we were in paralysis at the beginning of the month. And now, so as I mentioned, we have our own factory in the Philippines.
Yeah.
To the degree we had some programs in China, we are actively trying to move those and countersource and move those programs to the Philippines. We can't do everything. There's a lot of industry that cannot be done anywhere outside of China. And I think that's what's interesting. Like everybody's trying to move out of China now. But if you think about something like Christmas ornaments, like I was talking to a department store partner. We were visiting with them last week. They're like, we might not even have a Christmas ornament department this holiday season because that's the only place these things are made. So they're going to be, the consumer's going to see a lot. The consumer's certainly going to see higher prices, but there could be huge categories of things that you expect to see this fall that just might not be there.
Unbelievable. It's just, I know, it's kind of amazing to get. What? Go ahead.
Materials?
Yeah.
Are those are those from separate countries than China and the Philippines? We hear a lot about that, about the supply chain.
So a lot of the fabrics, a lot of fabrics come out of China. We get the higher end fabrics out of South Korea, but a lot of the fabrics do come from China. And frankly, even as a lot of the finished goods are moving out of China to other places, a lot of that fabric is still going to come from China. So it's they do a lot there that is only done in that country. And could it eventually move? Yes, but all of this stuff takes a lot of time. So we'll see.
I am curious, the fashion industry as a whole, what kind of, access do they have to the White House? And I'm just curious what they are hearing, getting time with, and so on and so forth. Just got about 30 seconds left.
Yeah, I don't have any. I can tell you that. I know there's like the CFDA, which has been putting out statements. I'm not sure what direct access they have. I think their industries probably the White House cares a lot more about than the fashion industry, for better or worse. But I think their Wall Street probably has its eyes on much bigger things. But I can say from my seat, it's a very interesting time for us, and I think everybody's just trying to make the most of it.
Or just 20. Are you going to have to lay anyone off? Do you think?
I hope not. Yeah. No, I don't know. Like we'll see. We'll see what happens. It is. It's a very difficult time. There's complete uncertainty out there. So it's challenging.
Well, you open up a window to really understanding kind of how things are made. I think we just take things for granted in terms of clothes and items. Ken Notori, thank you so much, president of the Notori Company, joining us here in studio. Be well. Thank you. Good luck.
It's 3:40 on Wall Street. I'm Amy Morris. Stocks trying to claw back those losses as we check markets for you. We do it all day long here at Bloomberg. The S&P 500 is up 19 points. Now NASDAQ, you were higher. Now you're lower, down 9 points. And the Dow is down 438 points. That's about 1%. The 10-year Treasury yield at 4.32%. The 2-year yield at 3.79%. Bond markets actually closed about an hour and a half ago, around 2 o'clock this afternoon for the long holiday weekend. President Trump announced the U.S. and Ukraine will sign a deal on critical minerals next Thursday. The partnership agreement would grant the U.S. first claim on profits transferred into a special reconstruction investment fund controlled by Washington. The president also expressed his disappointment in Fed Chair Jay Powell.
I don't think he's doing the job. He's too late, always too late, a little slow, and I'm not happy with him. I let him know it, and if I want him out, he'll be out of there real fast, believe me.
Trump posted on social media this morning that, quote, Powell's termination cannot come quickly enough. The European Union is working on a proposal to introduce restrictions on some exports to the U.S. as a possible retaliatory tactic in the trade war initiated by President Trump. Sources tell Bloomberg the restrictions would be used as a deterrent and only if negotiations with the U.S. fail to produce a satisfactory outcome. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody. We've got just about 18 minutes to go until we wrap up the trading day and the trading week. Remember, of course, it's the Good Friday holiday, so a holiday shortened trading week. And we've been bouncing
that
around.
bond market, not even open right now. Closed at 2.
Closed at 2, early. Right now, the Dow Jones Industrial Average, it is down about 1% as we speak. We know United Health has been a big drag. Amy just breaking that down for you as well. S&P 500 just up about 0.4%. NASDAQ 100, call it flat, just up about 6 points.
I did mention the bond market, so I do want to say we did see yields rise ever so slightly today. The 10-year at 4.32, 4.33. We can round that up.
It's been an interesting, mellowish kind of week.
I mean, really?
Although, well, we did see some movement, I guess, off of
it's all
Jay
relative.
Powell.
It wasn't. Yeah, it's all relative. It wasn't like what we saw last week, which was just wild, and the week before that.
Where's the VIX? Let me just look where the VIX is right
Where's
now.
The VIX?
VIX is down about 2.5 points. We're trading around 30.
Okay.
Remember, it was just last week that we were bopping up to 60 or so. That was on April 7th. So we've been moving our way down.
Okay, look at that.
Calming down-ish.
Yeah, well, I mean, again, it's all relative.
All right, let's see what our guest has to say.
Hey, I want to bring in Rayanne Mitrioni. She's the founding partner and CFA at Callan Family Office. She joins us from West Palm Beach, Florida. Rayanne, good to have you with us. The firm's got about $7.5 billion in assets under management. You know it is a wild week when Carol says this week has been calm. I should say a wild period of time. I want to know what the questions that you're getting from clients right now are, because we've been hearing a lot about people rethinking asset allocations, going more to Europe. What are you hearing?
Absolutely. Thank you for having me. And it's true. This week has felt a little calmer, but it is all relative, very different than the last couple of years. But yeah, I mean, clients we're certainly having a lot of communication. I think that's the most important thing when you're in a period like this, is staying close to clients, making sure they're feeling okay, and that
Rayanne, are they feeling okay?
It really depends. I mean, that's what it's about, kind of reconfirming where risk tolerances are and the allocations are in line with where they should be, because everyone has a high risk tolerance when the market's going up, right? It's a lot easier then. So it's like, how do you feel in this period? And a lot of the clients we work with are really ultra high net worth investors. So it's a little bit different.
So do they set it and forget it, or do they still, are they kind of, do they call you and say, what are you doing? Like, should I be worried?
Exactly. They still want to know that we're not just sitting on our hands and doing nothing when we're in a period like this. And we're not. I mean, we do think it's important to stay true to, long-term strategic investment plans, and not get caught up in the emotions of this kind of volatility. But we can do things like rebalance. I mean, we rebalanced a lot kind of coming into this year, pulling back on growth and rebalancing a little towards fixed income, towards value, rebalancing those exposures. And now we're kind of going a little bit incrementally in the other direction where we've ended up a little underweight equity targets on this pullback. So it gives us the opportunity to do that, look at loss harvesting opportunities to help our clients offset, their tax bills in other areas. So we are being active. And yes, we are certainly talking to them and telling them what we're doing as we're going through this period.
Rayanne, because you do work with such high net worth individuals, you describe them as ultra high net worth individuals. Do they have a higher allocation to alternatives?
Yes, absolutely. We do. When you need to have a certain level of wealth to access some forms of alternatives. And so that is a big part of our investment philosophy. And we do believe it's additive to returns over time, that you get a premium over what you can get.
Alternatives, it's such a broad category. So, dig into that part of the asset allocation. When we talk alternatives, what are you thinking? Are you thinking venture capital, private equity, hedge fund, private credit? What is it?
All of the above. So we are fully diversified within the private capital markets. So private equity, all the way, from venture to buyout to all sorts of different areas.
Directly invested, or are you doing like funds of funds?
Direct investments.
Okay.
In some cases, we'll do, a secondary strategy that may be more fund of funds as part of the allocation, but we invest direct in individual strategies typically. And we do that in the private credit world, in private real estate. We do allocate to hedge funds, which have, a lot of those with more defensive strategies or market neutral approaches have held up really well in this environment. So kind of across the spectrum.
How are you thinking about the environment? And certainly the news flow out of Washington, the trade war. I keep saying war, but I don't know that it's a trade war. It's just a back and forth of going to do this, going to do this, going to do this. And we're just watching very carefully. The markets definitely move, as you know, on that news. But I am curious, are you expecting we get to the other side and things settle down and we go back to quote unquote normal for U.S. equities and for the U.S. business environment and the U.S. macroeconomic environment, or are things going to be different?
We're hoping that we can at least get through this kind of whipsawed back and forth, headline driven, just complete focus on tariff situation. I mean, what we're hearing is that negotiations are in process. And hopefully, if we start to see some trade deals materialize, over the next couple months, hopefully that will help the market restabilize, help the focus kind of shift back to, let's see what's happening with company earnings, what's happening with other things, like are we going to see focus on tax cuts or extending the tax cuts, deregulation, things that would be more supportive to the narrative. I think this, tariffs, it's going to be part of the conversation for a while. But we're hopeful that this kind of volatility that we've seen over the last few weeks will at least settle down.
Your background, you've got a Bachelor of Science degree in psychology, you've got an MBA as well, but that degree in psychology, Tim has brought up a lot, and, we think about sentiment a lot in the market, but that University of Michigan consumer sentiment number that plunged to nearly a 3-year low, and that was in the last week or so. Sentiment in the markets, does it feel healthy? Does it feel nervous? And how concerned are you, even the nervousness you're getting from some of your clients, that turns into actions and people saying, I want to pull back, I'm not comfortable?
That's a very fair question. And we saw a sentiment surge following the election, and we've gone the complete opposite direction. And we've seen it both on the consumer side and the business side, that it's just come down so much. And it is in a concerning spot. People are not feeling good right now. And when you're in that spot, then you're having people are spending less, businesses are holding off on making investments or doing any hiring, and we're kind of in this period where we're just on hold. And
got it.
When you're in that kind of a bad spot, though, any kind of positive news or even halfway positive news can really help
Yeah.
the market to move up. It's looking for a reason at this point.
All right, going to leave it there. Have a good weekend. Rayanne Mitrione, she's founder partner, and CFA over at Callan Family Office. They've got about $7.5 billion in assets under management. Got to tell you, one of my gainers today, it's Hertz, and we are looking at it up about 43%. Headline crossing Bill Ackman of Pershing confirming a 19.8% stake in Hertz. We got some confirmation or some reporting on that yesterday, I think, from CNBC, and he had a filing before that. So that's stock on the run. This is Bloomberg.
You're listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week. I said things are a little mixed. The Dow down about 1.4%. Thank you to United Health as a result of that report. Shares of United Health just cratering right now. The S&P 500, it's flat on the day today, Carol. It's in the green, but it's moving toward the downside. The NASDAQ composite down by about 0.4%.
Yeah, I'm just curious in terms of what we're doing for the week here. Looks like...
You doing 4 days or 5 days?
Well, that's interesting. If I do HCPI week, I'm assuming it just covers the week. So it looks like, is that right?
How are we looking?
Is the Dow up 5% this week?
I mean, is it taking into account last Friday's move too? That's the question. Carol's going to do some math while I go through some stories.
I don't think so. Okay. I'll double check this. Go ahead, do some stories.
All right, I want to talk about this story. Shout out to Doug Krisner, who sent us this story, Carol.
Yeah.
Just crossing. The Transportation Department says that Amtrak, backed by the department, will take over the Penn Station reconstruction project in New York, replacing the MTA. The Federal Railroad Administration, quote, is also rescoping and slashing the federal grant to Amtrak for project development, which the department said will save taxpayers about $120 million.
Wow. What does that mean?
So I don't know what it means, but what I can say is it comes against a backdrop of the Department of Transportation and Sean Duffy in this fight with Kathy Hochul, the governor of New York, and the MTA over congestion pricing here in the city of New York.
So is this part of that?
I don't know if it's part of that, but that's part of the backdrop here.
Okay, so interesting. Yeah. You read the whole thing here, right?
Yeah, I read the whole thing. But there's a long state. You can, if you click the link that takes to the Department of Transportation statement, here's what Sean Duffy said in a statement, quote, President Trump has made it clear the days of reckless spending and blank checks are over. New York City deserves a Penn Station that reflects America's greatness and is safe and clean. The MTA's history of inefficiency, waste, and mismanagement also meant that a new approach is needed. By putting taxpayers first, we're ensuring every dollar is spent wisely to create a transit hub all Americans can take pride in. You're a New Jersey person.
I am.
But you don't use Penn Station.
I don't use Penn Station. I mean, I don't use Penn Station. No, I don't have to.
But you and I...
But in the past I have, when I went to college here in the city and was going home and when I was commuting in.
Well, just a couple years ago, you and I found ourselves at the Moynihan part of Penn Station.
So nice.
On a trip to, I believe, Philadelphia. We were taking the Amtrak.
Not so bad, right?
I was lovely. Blown away.
I have to tell you, it used to be kind of terrifying.
Yeah, I know. Moynihan, it was really, really nice. And anybody listening or watching right now who's spent time there knows Elizabeth Sedgren says it needs more benches.
It needs more benches. Okay.
I think that's by design, Elizabeth.
Yeah. Okay. So you get right on that.
It's supposed to be a hub for transit. You're not supposed to spend time there and like hang out.
I will say,
good food options.
Just going back to this Department of Transportation from Sean Duffy, the Trump administration is also championing a public-private partnership model for Penn Station, harnessing private sector innovation capital to minimize financial risk to taxpayers. So that I'd like to have a little bit more information on what that actually means. What the Transportation Secretary Duffy has to say about that.
We spent a lot of time on our program today talking about the president's comments with regard to Jerome Powell. It's the most read in the last 8 hours. It's the most read in the last single hour. We should hit on this. The president said he could force out the Federal Reserve Chair, Jerome Powell, rebuking the notion that the U.S. Central Bank is independent and venting frustration that monetary policymakers had not recently cut interest rates.
Yeah, keep in mind that Powell's term as Fed Chair runs into May 2026. His term as governor will last until February 2028. And this comes just one day after Jay Powell, speaking in Chicago, reiterated that the Fed isn't in a rush to cut rates and instead is awaiting greater clarity on the economy. You can check go to the Bloomberg. You can listen to some of what he had to say, too, about how his terms and governance in terms of the Fed, the congressional role in all of that. So he didn't seem too worried.
Can I tell you something?
You can tell me
The S&P 500 is doing nothing right now. It's doing nothing.
I'm not surprised. Finally, things settling down.
Finally.
Do not go anywhere. We're wrapping up the trade on this Thursday, wrapping up the trading week as well. Heading over to our TV colleagues, that's because the closing bell starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Scarlet Fu. We're taking you through that closing bell. A global simulcast. It starts now. Carol Massar is still here 4 straight days in a row. Tim Stenovic by her side as we welcome our audiences across all of our Bloomberg platforms here on a holiday shortened week. Carol Massar with stocks not really doing much of anything. We'll just call it unchanged on the day for the benchmark S&P.
It feels like finally investors in the market got the message that it is a holiday shortened week and we can take a breather. But I do think, again, we're kind of waiting for what is next. But we're also like, let's not forget, we're in the middle of the earnings season. We've got a big one coming after the close. We're talking about Netflix.
Yeah, the Dow taking an outsized hit as a result of United Health shares just cratering today. But the S&P 500, it was as high as 1% earlier in the session. It was as low as 0.4%. But as you said, really doing not a whole much of anything right now.
Yields are moving higher, although, even with them moving higher, it's still a long way off from where it was at the peak of last week. So we kind of head into this weekend breathing a deep sigh of relief, waiting to see whether there are any headlines tomorrow or Saturday, especially after today's, I was going to say Tweet Fest, but Twitter.
Oh, no.
That brand no longer exists.
No headlines can come on Friday or Saturday or Sunday.
You think?
No. We're on vacation.
Not from this president.
Long weekend.
Long weekend here. I mean, we talk about this idea of whether investors are truly looking for bargains. Andrew Sliman at Morgan Stanley Investment talked about this just a few minutes ago on the Bloomberg Network. Look, we're still at a 15% drawdown on the S&P 500. So if you believe there is some long-term optimistic story for the U.S., maybe you do take advantage of these dips, like some of the ones that we've seen over the last few days. Here are the numbers on the day as we wait for those Netflix earnings across the wire any moment now. A Dow Jones Industrial average lower by about 1.3% on the day, and that's going to be a drop of about 3% over the 4-day week. The S&P higher by about 0.1% on the day. The NASDAQ Composite and the NASDAQ 100, we'll just call it unchanged on the day, though a slight tilt to the downside. In your bright spots today, the Russell 2000 up 0.9%, Dow Transport's up 2.4.
All right, folks, S&P 500, most names in the index actually higher today. 384, Scarlett, to the upside, yet 118 to the downside.
All right, and a quick check on the IMAP, the 11 sectors in the S&P 500. You have 8 in the green, 3 in the red. The decliners are tech, healthcare, and communication services. Leading the gains are energy, consumer staples, and real estate investment trusts.
All right, quick, guys, as we wait Netflix, Eli Lilly, one of the big gainers today, up about 14.5%. That after it showed its experimental weight loss pill worked, as well as the Ozempic shot, bringing it closer, one step closer to developing a needle-free alternative. So big outperformer. Got to mention Hertz after a 56% record gain yesterday, up another 44% in today's session, just crossing the Bloomberg moments ago. Bill Ackman confirming that 19.8% stake in the company.
All right, Netflix crossing the wire right now. The company basically saying that in its fiscal first quarter, EPS did come in at $6.61 a share. That's a beat. The street was looking for $5.68. Revenue, $10.54 billion, pretty much in line with street estimates. Here's your guidance for the fiscal second quarter. Revenue tracking above a midpoint of its 2025 forecast range. Those are the exact words of the company here. The revenue number, $11.04 billion. The street on average was looking for $10.88, so that would actually be a beat for the full year on the revenue side. The company providing a range, $43.5 billion to $44.5 billion. The street on average was looking for $44.33 billion, Scarlett. So at least on the top and bottom line, it does look like a beat on both what happened in the most recent quarter and their guidance for the current quarter and the current year.
And remember, this is a stock that's done tremendously well. So far this year, it's up almost 10%, beating the broader market and the Magnificent Seven, although it's not a member of the Mag 7. In terms of other things it says about its outlook, it still sees its full year operating margin at about 29%, just below the consensus estimate of 29.2%. And it still sees full year free cash flow at about $8 billion. 88 would be a huge number, $8 billion, when analysts were looking for about $8.5 billion. And Tim, of course, this is a company that is no longer providing any subscriber growth numbers. It wants to get away from that and really put the focus on revenue growth, particularly in things like its advertising business.
Yeah, and trying to squeeze as much money from customers that exist already via advertising and raising prices. What you said, Scarlett, about not changing its guidance, they call that out really at the top. That's a pretty big deal given what we've heard from other companies. And look, this is a company that is relatively safe from tariffs, but I guess there is also the concern that if consumers are going to pull back, perhaps they would pull back on a service such as Netflix. You said they're not providing subscriber data. That's certainly true. What they are providing, though, are numbers when it comes to content. They say that the third most popular English language series ever, Adolescence, came in at 124 million views, and there's just this list of content, a list of shows and movies that show how many people are watching. I mean, if you remember Netflix, this is such a far cry from what it used to do with holding that data so close to it before it offered advertising.
Well, that's what I'm curious about, too. I mean, I know everyone's upset that they're not going to provide the actual subscriber numbers, but I think the fact that now they are providing more details on the actual views of these particular programs, and I know some of those numbers are a little sketchy, but the point is that we can now actually get a better sense of which programs are doing better than others.
Hey, just looking at the press release here, talking about monetization, they say as we deliver more value value to members. We refine our plans and pricing to improve monetization to drive investment in future service improvements. They say recent pricing adjustments that they made in large markets, so they're talking about the US, UK, and Argentina, have performed in line with expectations. And they say today we're adjusting prices in France, which they already factored into their 2025 guidance. And they say they continue to make progress building out their ads business. We know that they have incorporated that into an ad-based model as well.
I thought it was interesting, too. I mean, we were talking the last couple of quarters about that push into live events. They talk about now how they basically have WWE 52 weeks out of the year. They also talk about some of the additional expansions that they're making in live sports and other live events like stand-up. And I do wonder if that becomes a little bit more of the core of what this company becomes.
I think it does. I mean, even at the top of this statement, Romaine, they say that the live offering with WWE Raw has been on our global top 10 list every single week. So it looks like that customers, that subscribers, it's really resonating with them. I mean, it was just a few years ago that analysts were saying, no, Netflix is never going to do anything live. They're all about everything on demand when you want to watch it.
They also say they would never do advertising, an advertising and they moved into that.
Exactly.
But to your point, Tim, too, I mean, they also, I didn't watch the Taylor Serrano boxing match, but according to them, they're basically saying, and that was last July, they're basically saying that that was the most watched professional women's sports event in history, in U.S. history. Not necessarily on their platform, U.S. history overall, which says a lot.
It does say a lot.
And some of the other numbers, I mean, you saw, the numbers that you had for adolescents, which you mentioned, 124 million back in action. That was a Cameron Diaz, Jamie Foxx.
That was a good one.
Which I actually watched.
Season 2 of The Night Agent. I walked by
146
Carol's desk. I walked by Carol's desk, and she's watching The Night Agent Season 2 on her phone. She just can't put it down.
I'm not. Hey,
was she holding a glass of wine?
Yeah, well, you better believe
We have
it, buddy.
wine later, by the way, guys.
Hey, their commentary also, they talk about 2025 revenue outlook assumes healthy member growth, higher subscriptions pricing, and a rough doubling of ad revenue, partially offset by currency net of hedging. Keep in mind that we did see a pop in Netflix, went up about 5% earlier in the week. And some reporting in the Journal about, some really upbeat projections for this company over the next couple of years. Talking about $1 trillion, I think, streaming revenue, or $1 trillion, valuation, right, by 2030. So
that's the medium-term outlook. What intrigued me with this release, and it's going to be such a contrast to all the other companies that report, is in giving its guidance for the full year, they've said there's been no material change to our overall business outlook since our last earnings report. How many companies can say that in April of 2025?
Not a lot.
Exactly. No material change to our overall business outlook.
One thing I am curious about, though, too, I mean, you see there on your screen there, only up about 0.8%. We came in today with the options market predicting a move up and down of maybe about 8%. This is a stock that's normally pretty volatile, and I do wonder if a lot of that upside was already priced in.
I totally agree with you. I was like looking at, kind of watching, waiting for it to pop at least 1%, if not more.
Yeah.
And so I agree with you, and that's why I think that 5% gain that we saw earlier in the week, it was up about 1.5% on Monday. So maybe some of that expectation already built in. And it was up another 1% in today's regular session.
Also, the company specifically calling out international expansion and what it's doing outside of the United States, as Lucas Shaw points out in his write-up of the results. A significant portion of the quarterly letter to shareholders talks about programming outside of the U.S., especially in the UK and Mexico.
Sounds like they kind of front ran themselves, when they gave out their whole 2030 outlook, revenue doubling, tripling their operating income. They're kind of laying out the lay of the land here, and they see a very steady growth trajectory in a way that a lot of companies can. It's a way of flexing.
Yeah, I guess, yeah. And we are talking about a stock that's up 12% just the last couple weeks alone, outperforming pretty much everything else in its peer group. So,
Squid Game's your favorite, right?
I've never seen it.
I finally
season 1 was great. I didn't watch season 2.
No, Back in Action is his favorite.
Is that a cooking show? I like those competitions, Chopped.
All right.
Top Chef.
What are we going to do with you? Oh,
Iron
my God.
Chef.
All right. No, it's not a cooking show. All right. That's a wrap. Across platform
Great
coverage.
British Baking Company.
Are you done? Across platform on radio, TV, YouTube, Bloomberg Originals. We call it the closing bell.
I think I would do well on the Great British Baking Show.
We call it Romaine Never Stops Talking.
I don't.
Just kidding.
I don't.
Have a good and safe long weekend, everybody. We will see you again on Monday.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Okay, Netflix shares finally bouncing around a little bit, up about 2% in the after hours. The company did just report first quarter profit that exceeded estimates. It was boosted by a recent price increase, a strong slate of programming across the globe, like the UK hit series Adolescence. I want to bring Lucas Shaw in right now. He's been all over this story, and he's all over this company and has been for years. Lucas, this report is unique because it's the first time they haven't reported subscriber data. We knew this was coming. Everybody knew this was coming. Is there a way to back into that number, or are investors just ignoring that now?
Well, I think you can try to figure it out, at least in the first couple of quarters, by looking at revenue and modeling out how many people that they added, and you factor in the price increases. But look, a lot of other companies get measured based on sales and profit. There's no reason Netflix can't. It's a little less fun for me. I think it's a little less fun for all of us. We'd appreciate the added transparency. But for they made sure that in the first quarter of not doing that, they met or beat on pretty much every metric.
What for you, Lucas, also stands out? I mean, we were just talking about too, and that it has been an outperformer. We've seen some movements up certainly this week, but what for in this release? There's a lot there that really stood out for you. Is it some of the content that they're offering? We talked a little bit about live content and sports with our TV colleagues, but I'm just curious for you, what's significant here?
I was a little confused. They issue this letter to shareholders every quarter, and they had this long section that was titled Competition that didn't really talk about competition that much. They spent a lot of time talking about how much they're investing in production overseas, and then they had a chart from the UK showing their growth there and how they're only behind BBC and ITV. And I think important to Netflix, on television screens, they're ahead of YouTube, because Netflix really doesn't like that in the US, YouTube can now say that more people watch it than Netflix. So I sort of read that as like a long effort to show ways in which it's both ahead of all of its sort of traditional Hollywood competitors, and in some of these foreign markets on televisions, it's still ahead of YouTube. I think that's where Netflix feels the most competitive pressure at the moment.
Does it still feel like it can? I mean, Lucas, this is a company that, years ago would say it's competing with anything that anyone is doing looking at a screen, whether that's gaming, whether that's watching traditional linear TV, whether it's looking at TikTok, for example. I think there was a year they called out TikTok specifically, or a quarter they did that. Do they still think about all those? Or do they still think about competition that way?
Yeah, the company still thinks of anything that is leisure time as competition.
Okay.
How much it talks about some of those other behaviors, I think, depends on the quarter, right? Like right now, they may be more focused on your traditional video entertainment programming. There's some quarters. I feel like they oftentimes do that when they have like a really killer quarter, because they don't really need to spend any time on their immediate competition, because everyone can see that it's going very well. And so then they talk sort of loftily about like Fortnite or TikTok or sleep or any of these other topics.
How does it feel to not get those subscription numbers?
I mean, I don't like it. Who would? We all like using data to evaluate a company. It was always the easiest way to know if things were going well or not. And it feels a little, even though they would push back on this, it does feel a little bit like they're trying to hide it, because they know that their subscriber growth is going to be good, but not as good as it used to be. And so it allows them to, they can only do so much to adjust the subscriber numbers, but increasing and decreasing subscribers is now just one of a few levers they have, right? Because they're going to raise prices, they're going to have advertising, they're going to do a lot of different things that allows them to kind of shift people from a metric that is maybe a little harder to control to one that's a little easier for them.
Lucas, as we were preparing for these results, we saw this narrative emerge that this is, a tech company that could be at least a little shielded from the chaos that we're seeing when it comes to tariffs, when it comes to trade, because, well, look at what they're dealing in. But at the same time, it is a discretionary expense for consumers. So I'm wondering how you view that, and whether or not, if we do see maybe some sort of downturn as a result of higher prices from tariffs, from trade, that could actually be a risk to the company.
Yeah, I think consensus is that they're, to your point, they're more insulated. Both because, look, they don't deal in any hard goods. So there's the tariffs don't have a direct impact unless you start to see other countries, impose price increases on services, which is possible, but not something that we've seen yet. They're a little bit impacted in the cost of making things because of just tariffs will impact factors that go into production. But in terms of discretionary income, look, they keep raising prices. Maybe some people will decide Netflix just isn't worth it. Netflix has the best churn, which is sort of the cancellation rate in the streaming business. It's way ahead of everyone else. And so you have to think that when people are looking at what they're going to cancel, it will not be at the top of that list. It will probably be close to or at the bottom of that list. So again, I think they're in better position than most. But look, they're big enough that even a slight increase in churn is a headache for them. So they're not immune. I just think it depends on, if we go from a trade war into a full-on recession, or if we just have like this period of uncertainty. I think just uncertainty is fine for Netflix. A recession's not good for anyone.
Hey, one last quick question for you, Lucas. On the analyst call, what is the question that must be asked?
Good question. I expect they'll get a bunch of normal questions about sports and advertising. I guess I'm probably most curious about advertising. They keep talking about how they're close to this being a material part of their business. They're teasing it out a little bit more in their shareholder letter, but we haven't really had any material numbers on that business other than like these sort of vague monthly active user figures. So I'd love for them to go into more detail. I don't expect that they will.
All right, great stuff. Hey, thank you so much. Have a great weekend. Bloomberg News entertainment reporter Lucas Shaw with a breakdown on Netflix. Just want to draw everybody's attention because I'm looking at it in the aftermarket and we're now seeing the stock up about 3.6% here. Let me just pull it up once again on my Bloomberg. Yep, almost 3.8% as we speak. Netflix reported first quarter profit that exceeded Wall Street forecasts, boosted by a recent price increase and a strong slate of programming across the globe, like the hit UK series Adolescence. Keep in mind, this is the first time that the company has reported financial results without disclosing how many customers it added or lost, something we talked about with Lucas Shaw, which has been such a crucial yardstick, to gauge the company's performance. But again, the stock up about 3.9%.
Hey, I want to bring in Mark Douglas right now. He's president and CEO of Mountain. It's the company that has software that helps companies target advertising when it comes to smart TVs. He joins us here in the Bloomberg Interactive Broker Studio. I want to pick up exactly where Lucas left off, and that's advertising. Sure. We don't know a lot about how much revenue is actually coming from advertising. They don't have a specific place for it in the shareholder letter today. How much do you think they're getting?
I think it's still pretty small for them, but what's really important is half of all new subscribers they reported previously in previous quarters are buying the ad-supported tier.
What does that tell you?
So it tells me they have a growing backlog of revenue that's going to occur in the future, because essentially every person that gets the ad-supported tier is currently under-monetized. But despite that, they have record-breaking earnings. So imagine what the earnings are going to be when they are fully monetized, which would effectively double the revenue per customer for their new customer.
You must have spent time with the advertising tier of Netflix, just given your business.
Yeah, well, I know a lot of the key people, but...
No, but I mean, like, the experience, because I think a lot of people who have been using Netflix for years, we don't have the advertising plan, so but if you're watching something on YouTube, for example, and an ad is just thrown in there, it can be pretty disruptive.
Yeah.
What's the experience on Netflix?
It's like watching any other streaming service, ad-supported streaming service. There are pods of ads. There's just a lot fewer ads right now.
How well is it targeted?
I don't think it's very targeted. I think Netflix...
That's probably an issue, right?
Right, it is. It's because Netflix is kind of starting from the big brand advertiser perspective, and to really fully monetize that, they have to take market share away from the entire rest of the industry, because those big brand advertisers, they're not increasing their spend. So I think... sport, NFL games, in the nearly Super Bowl numbers on a regular
I
weekend.
don't know. You're more of a UFC person.
Yeah, totally.
Yeah.
Not. Advertisers, where do they want to put their ads in terms of content? Is it the live sports stuff? What is it? Do they care? Are they picky?
It depends on the advertiser, but generally you can sell live sports all day long. For Mountain, we're kind of not in that game. We're not dealing with brand advertisers.
Yeah.
But I know when I talk to all the big agencies and things like that, it's all about live sports. They just it's an insatiable appetite.
Linear,
for
streaming, they don't care.
Yeah, streaming live sport. ESPN is now rolling out streaming live sports,
Yeah.
and people are. I know from Disney, people are just lining up to buy it, and it's every streamer is in the process of doing that, and so it's always that. After that, I think the appetite changes a lot, but there's just something about the engagement in live sports that advertisers love.
Yeah, the November 2024 Taylor Serrano fight on Netflix became the most watched professional women's sports event in history. They say that with the upcoming rematch, we're poised for another groundbreaking night that will further elevate the profile of women athletes. In addition, Netflix has opted into a second game for Christmas 2025, where they'll be the home of the NFL for Christmas Day. My sister was watching that last year on Christmas Day. They say live efforts have primarily focused on the U.S. We expect to extend this strategy to other countries over time. How big of an opportunity is that for Netflix, given what you told me about the ad demand for live sports? Huge for Netflix if they expand this outside the U.S.?
Yeah, I mean, if I was a sports league, if I was Formula One, I would literally just live in front of Surrender's house. Just
Really?
be like, let's do a deal.
Why do you think they haven't done one?
Well, they already are doing that because F1's become so popular with the
Drive to Survive, yeah.
Imagine if it wasn't just last year, it was like this
So why is it
weekend's
not there now, do you think? Is it like long-term cable deals that are in place already?
Yeah, I think it's long-term deals. I wouldn't be surprised if Formula One comes there. They go to Europe, of course, football in Europe. I mean, it's just something there. But Netflix is smart. They're going to sports that are like female boxing that wouldn't necessarily be something that would attract a huge audience and get the highest rates, and they're turning it into the most watched female sports event in history. And this is the superpower that they have. It's the advantage that they just have over every other streaming network by being the first thing you click when you turn on your TV.
Just want to mention, we are talking with Mark Douglas, President and CEO of Mountain. Shares of Netflix, they're up about 4.6%. This as the company logs record profit in the quarter, revenue tracking above the midpoint of its 2025 forecast range, and it does see second quarter revenue, so the current quarter that we're in, $11.04 billion. The estimate is $10.88 billion. When it comes to advertisers, does everybody else want to just be Netflix, especially when it comes to streaming? What do you hear from advertisers? Is their first choice always Netflix?
Not for I think people are very intrigued by advertising on Netflix, but at the end of the day, they want the consumer wherever they are. And so Netflix started their ad tier with very, very high pricing, and they've had to kind of come back down to reality and retool. So I don't think advertisers like Netflix or nothing, but Netflix has the most viewers, so they potentially have the most ad space over time.
One last quick question. We know you're going to join our TV colleagues in just a moment, but a federal judge ruled that Google illegally monopolized online ad technology markets for advertising exchanges and tools used by websites to sell ad space. So they say we're doing anti-competitive acts to acquire and maintain monopoly power in these markets. So what does that possibly mean if this stands?
I don't think Google is losing any sleep over that ruling. If anything, it's their dream scenario. It's a small part of their business, but the U.S. federal government has been very focused on it from an antitrust, and in fact, they're it's like focus on that. Yeah. Don't focus on search and AI. And so, to me, it's almost a dream scenario. The best dream is that they're left alone. But if they have to, kind of focus on that and even potentially give up that, great scenario for them. I don't think any investor should be worried about Google losing that part of their ad business.
All right, kind of interesting. Different perspective. And we will say that Alphabet shares were down about 1.4% today. A little bit of a swing. Mark, thank you so much. Mark Douglas, he's president and CEO of Mountain. The company has software that helps companies target advertising on smart TVs. So good to get his perspective. Mark, thank you.
And Netflix shares higher by about 4.5%. For more on the markets and stock moves, let's send things down to Washington, D.C. Amy Morris is in for Charlie Pellet. She's got a business flash. Amy.
All right, thank you, Tim. United Health's worst day in decades, keeping Wall Street in check, even as most U.S. stocks were able to rise. United Health shares closed down 22%, the most in almost 27 years. The S&P gained 7 points, NASDAQ lost 21, and there's the Dow, down 527 points. The bond market closed early for the holiday. 10-year Treasury yield, 4.32%. The 2-year yield at 3.8%. Netflix reported first quarter profit exceeding Wall Street forecast, boosted by a recent price increase and a strong slate of programming. The company's earnings rose 25%, beating analyst estimates. Sales grew 13%, in line with projections. Shares of Netflix now up more than 4%, almost 4.5% now in the post market. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Carol Masser and Tim Stenovec.
Thanks so much for that update, Amy. Do appreciate it. What a week.
I know.
Can you believe it?
Yeah. No, yes.
No, yes, can
yes,
you?
no. It's been kind of crazy
Okay.
again.
Well, when it comes to the markets,
It's
it was
kind of
quite a week. But last week was quite a week, and the week before that, Carol, was quite a week.
It's almost surreal, excuse me, to be talking about like Netflix earnings because we've been so obsessed with stuff out of DC.
I know, and it
the
is
swings
it's
as
a reminder
result.
it's a holiday shortened week. For a wrap of the week that was, I do want to bring in Eric Weiner. He's senior editor for Equities Americas at Bloomberg News, as well as Vince Signorella. He's Bloomberg News macro strategist. Eric's here in the studio. Vince joins us from White Plains. Eric, I do want to start with you. Much more of a quote-unquote normal session today, I think it's fair to say. But if we kind of think about the context of a trade such as this, I think Carol said it best when she said this was a really relaxing week, because it wasn't. In any other world, it wasn't a relaxing week. But given what we've seen over the last three,
Just
it
a
was.
little bit?
It
It was like a 900-point drop on the Dow yesterday. I don't know.
It was more linear, I would
Okay,
say. So
okay.
you pick up, in the morning, and it heads in one direction, and you keep going there, and that's actually not so bad. But like, I'm looking at headlines saying that the Dow dropped 500 points, and knowing that, like, United Health was 800 of those points.
Yeah,
exactly.
You can sort of see the outsized moves.
Like when I can understand what's happening, like you can kind of pull away a little bit.
And that's really the thing is today about 100 stocks were down, or 200 stocks were down.
Yeah.
So it was more of an up sort of feeling, and we're heading into this sort of uncertain period right now. So volume is low, it's right before Easter, tomorrow's off. It's just really, this was a hard week to get your hand around exactly what people are thinking.
And just to clarify, the 700 points lower is where the Dow closed yesterday, but it was down as much as 974 points at one point in the day.
Anything definitive in terms of trends this week, or was it, like you said, it was just kind of, were we just kind of, I don't know.
I feel like, personally, the end of the session was Powell's scare. Today.
Interesting.
Yeah, if you look at...
So that's where we're going.
We were up about 1%.
Off the Journal story?
What's that?
Off the Journal story, or
Off
the
the
comments from the
headlines,
president from the Oval Office as well?
All of it.
All of it.
Because we were up about 1%, and then all of a sudden it starts fading. We turn negative briefly, and it was all pretty much right around the time that started. And we started getting a sense of, people thinking, oh no.
But we didn't fall off a cliff. We didn't fall off a cliff.
Vince Signorella, come on in here.
Sorry, Vince.
I heard you speaking about this earlier in the day, and a lot happened since you were on Bloomberg Radio earlier. How are you looking at the way that the president is speaking about Powell?
He's always said this about Powell. He's never really liked Powell's approach. His constant comment is he's slow, he's lazy, he's behind the curve. He should be cutting rates like
Vince. I just want to jump in. Fair, but this is different.
Yeah, no, totally. And look, no one is putting a lot of stock in what Trump is saying. Behind the scenes, Besson is basically saying to him, if you fire Powell, the markets are going to get wrecked. And he's warning him about that. So knowing that, the market believes that, you know, whatever Trump is saying, he's just trying to push Powell in the direction of cutting rates, but he knows he really doesn't have any power over that, and he knows realistically he isn't really going to fire him, even though the comments after he met with Kevin Warsh were like, he'll do what I say, you know, he'll do what I tell him to do, and if I tell him to go, he's going to go. And Powell's basically said, I'm not going anywhere. So no one believes the rhetoric. It's all smoke and mirrors, But yeah, go ahead.
To be fair, Vince, like I feel like the first go round, and we talked about this with our Josh Green of Bloomberg Business Week, who's got a great story in the terminal about how I think the first go round that the thinking was President Trump should be taken seriously, not literally. Although this go round, it feels like, you know, kind of when he says some things, yeah, he means it.
You know, you know, he may mean it, but I just think it's all, you know, much to do about nothing. There's nothing he's going to do about it. You know, he's trying to intimidate Powell, which is, you know, really realistically a waste of time. You know, that's not a guy you're going to be, you know, he's not a pushover. He's been around the world a few times. He knows what he's doing, and you know, he's traded. He's been on the street. He's not going to be intimidated by Trump's. And you know, how do you take something away from the man who has everything? You know, you can't. He's bulletproof. You can't hurt him. You know, if he loses this job, he just goes to work for, you know, PIMCO or something for 11 times what he's making now. I mean, you can't.
I don't think that anybody's concerned about Powell.
I'm not worried about Jay.
Yeah, I'm not worried about him, but I would be concerned about Trump trying to get rid of Powell. That could lock up a lot, and he's showing signs of being willing to do stuff that you would never do, trying to get rid of Harvard's tax exemptions, things like that. So he could take this all the way to the Supreme Court. He'd get rejected. It would be really, really hard to get it through.
But it would be messy.
But it will be a mess.
And we're right now at this point. It would be in the
middle of them trying to navigate rates and handling the rest of the tariffs and everything. So
and as you pointed out, bring in a new Fed chair within a year.
Yes.
So it's also, you know, could not extend it, but make that messier.
Well, at a point when we're already got maybe some investors questioning the credibility of the United States and the financial system, that would not be a good thing, Eric.
No, and the other weird thing is that Warsh was a real hawk. So he's not somebody that you would count on to cut rates. Now, he may have told Trump that he would do whatever Trump wanted him to do, but it's a very strange setup that we're in right now.
Save 20 seconds for you, Vince. Go ahead.
Yeah, no, I think everything you're saying is absolutely true, but I think Powell is above that. And, you know, all of the slings and arrows that Trump are going to throw at him, you know, are just going to be, you know, he's just going to dust them off, and he's going to do what he thinks he needs to do for the economy. Yeah. And right now, realistically, there isn't anything he can do potentially facing stagflation. So, you know, it doesn't matter who the Fed chair is, not going to be cutting rates if inflation's sticky.
Get rid of the Fed chair and you want to see Yippee in the Treasury trade. Guys, have a good holiday weekend. So appreciate it. And thanks for all your help throughout the week. Really appreciate it. Eric Weiner, Senior Editor, Equities America at Bloomberg News, and Vince Signorella, Bloomberg News macro strategist out there in White Plains. All right, folks.
You want some wine?
Oh, yeah.
Okay, that's next. Yeah.
I love our producer. Thank you for not getting rid of this guest. This is Bloomberg.
You're listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week Daily. That's Carol Massar. I'm Tim Stenivek. Let's get right to the White House, where President Trump is answering questions after signing executive orders. Take a listen.
About it with regard to tariffs, Howard. I mean, it's something that could be a part of it, but tariff negotiations are actually simpler than that. I mean, we're going to set a number, and people are going to pay that number, or they're going to decide to go elsewhere if there is such a place. There really is no elsewhere, I think.
Mr. President, in the first term, your Attorney General apologized to Tea Party groups who have been targeted by the IRS under the Obama administration. Why is it okay for the IRS to now be looking at changing the tax status of Harvard because of policy disagreements you had with the university?
So, you know, I had dinner last night with a lot of pastors and ministers and people of faith, and there were like 32 of them, and it was beautiful in the Blue Room, and they said, "Sir, I was targeted by the IRS, and the FBI came in, sir, and I've been going through hell for years." And somebody overheard that statement, and they said, "Oh, that happened to me too." Another one overheard, "Oh, that happened to me too." It was the Biden people, and they had 7 or 8 of them. We're going to be reporting it very soon. I said, this has to be reported. These are ministers, pastors, evangelicals. They were targeted by the Biden administration, which was a disgraceful administration. Well, I was targeted more than anybody in history. I think you probably know that. I hope you admit it, but you might not. But I was targeted more than anybody in history. But it was interesting because one pastor told me, and another one heard it, "Oh, me too, and me too, me too, me too." All of a sudden, they're all, and one of them spent all of his money, everything he had on lawyers, for 3 years, he said. It took place almost immediately after the election. After the election, when Biden came in, unfortunately for the country, sadly for the country. So when you ask me that question, I immediately say, let's switch it around to tell you what happened last night. And not only that, we're also finding that many people, just having to do with Trump support, have gone through hell. And they've used the IRS for purposes of something that's very illegal for them to have to do.
What are you trying to
It's a
achieve?
very illegal, it's a very, very illegal thing to do, what they did. And I think it's such a shame. That was long what?
If that was wrong, why are you considering changing the tax status of Harvard?
Because I think Harvard's a disgrace. I think what they did was a disgrace. They're obviously anti-Semitic, and all of a sudden they're starting to behave. But when you see what they were saying, what they were doing, when you see the way they took care of events, when you watch that woman, that horrendous president that ruined the image of Harvard, maybe permanently, in Congress, in the halls of Congress, when you take a look at what happened there, it was horrific. And, you know, I've looked at a lot having to do with it. I'm not involved in it. It's being handled by lawyers. I read about it just like you did. But tax-exempt status, I mean, it's a privilege. It's really a privilege. And it's been abused by a lot more than Harvard, too, by a lot more than Harvard. So we'll see how that all works out. I don't think they've made a final ruling. I don't believe they've made a final ruling, but it's something that these schools really have to be very, very careful with. Very anti-Semitic when you take a look, whether it's Columbia, Harvard, Princeton. I don't know what's going on, but when you see how badly they've acted, and in other ways also, so we'll be looking at it very strongly.
Subject on the tax-exempt status subject. What are the other groups you'd like to see that status removed from? Could we expect an executive?
Well, we'll be making some statements, but it's a big deal, and they're so rich and so strong, and then they go so bad. They've earned so much by being a member of this country, you know, a member of this group, this beautiful group of people in this country, and then they go and they abuse their power like that. I think it's very sad.
Are we talking about immigrant rights groups, environmental rights groups?
Could be. I mean, look, environmental. I have a group named CREW. You ever hear of it? I think it's CREW. And they have a guy that heads CREW It's supposed to be a charitable organization. The only charity they had is going after Donald Trump. So we're looking at that. We're looking at a lot of things. But if you take a look at Crew, what they've done, and I think it was a very big abuse, but we're going to be finding out pretty soon.
Can you explain the disconnect between your conversations with President Xi, when those potentially could happen, and why they haven't happened yet?
Well, you don't know whether or not they've happened.
That's my question.
Yeah, I mean, I've never said whether or not they've happened, but I have a very good relationship with President Xi, and I think it's going to continue. And I would say they have reached out a number of times.
Xi or they?
Well, the same. I view it very similar. It would be top levels of China. And if you knew him, you would know that if they reached out, he knew exactly. He knew everything about it. He runs it very tight, very strong, very smart. And, yeah, we're talking to China.
So they've reached out in recent days or recent weeks?
Excuse me?
They've reached out since the 145% tariffs?
Oh, yeah, sure.
Do you believe
a lot?
Do you believe
a lot all the time. We're talking.
Have you talked directly to President Xi?
I don't want to say that. Yeah. It's just not appropriate.
But you're speaking.
Sorry. Has he called you directly, President Xi, or reached out to try to facilitate a conversation?
Well, you'd think it was pretty obvious that he has, but we will talk about that soon. It's not that important because, honestly, we're going to have a deal. I believe we're going to have a deal with China. And if we don't, we're going to have a deal anyway because we're going to set a certain target, and that's going to be it. Do you have anything to say about that, Howard?
I think our tariff policy around the world has every country in the world coming in and talking to us. It is incredible. We had country after country in yesterday. We are confident that we will work out something with China, and the president knows what he wants to do, and I think he knows it better than anybody else in the world, and we are confident that this is going to work out well, both for the United States of America. I'm sure he'll work it out with China, but the amount of other countries who are working with us is incredible, and I think it's really going to work for the American farmers, for our ranchers, for our fishermen, for our businesses. The scale of companies coming to America just every day, like even this morning we were talking about Whirlpool, and then we were talking about car companies opening. The scale of factories coming to America is mind-boggling, driven by Donald Trump's tariff policy, which has got the world coming and finally respecting the United States of America.
President Trump, you said
And by the way, there's never been anything like it. We have at least $7 trillion of new businesses coming in. If you go back and look at others, I mean, in years they wouldn't do anything like that. So, and this is in a matter of weeks, so it's been pretty amazing.
You said we're talking, so China and the U.S. are talking on tariffs.
Oh, sure.
Do you believe then that they won't go higher than 125%? We've heard Chinese officials say that. And like, what happens if they do go higher? Do we retaliate more?
Well, at a certain point, I don't want them to go higher because at a certain point, you make it where people don't buy. So I may not want to go higher, or I may not want to even go up to that level. I may want to go to less because, you know, you want people to buy. And at a certain point, people aren't going to buy. And it's actually up to 145% because you have the 20.
You previously said that you would consider reducing tariffs on China to get a TikTok deal done. Is that still on the table as of now?
Well, we have a deal for TikTok, but it'll be subject to China, so we'll just delay the deal till this thing works out one way or the other. And I think it's a good deal for China. The TikTok deal is very good. TikTok is good for China, and I think they'd like to see us do a deal, especially the deal that we have pretty much done with some of the best companies in the world.
If they agree to sign the deal, would you take that into consideration?
I think it would be something we discuss because it's it's a natural. If we're making a deal, I guess we'll spend 5 minutes and talk about TikTok. It wouldn't take very long.
Can you give us a sense of how far along these negotiations are with China? Are they in the early stages, or are you inching closer now to actually making a deal on tariffs?
I think that we will make a deal with China. I think we've had some very good talks, but we will have some very good talks remaining. And, you know, I view it, and some people say, oh, rush. I think we have a lot of time. I think we have plenty of time. But we have very, very good. You saw Japan was here yesterday. We had Italy today. We had a great conversation with the Prime Minister. We've had very good talks yesterday with Mexico. Talking with everybody. You know, the problem is it's only so many hours in the day. I think we're going to make a deal with China. We're going to make a deal with everybody. And if we don't make a deal, we'll just set a target, and we'll live with that, and that'll be fine.
How much time do you think it would have?
I would think over the next 3 or 4 weeks, I think maybe the whole thing could be concluded. You have to understand, we're a big, if you think of us as a big, beautiful department store before that business was destroyed by the internet. We're a big, beautiful store, and everybody wants a piece of that store. China wants it, Japan wants it, Mexico, Canada, they live off it, those two. Without us, they wouldn't have a country. And everybody wants a piece. And at a certain point, if we don't make a deal, we'll just set a limit. We'll set a tariff, we'll set some parameters, and we'll say, come in and shop. They may not like that, and they may find it, or the market may find it too high, more likely the market, but the market may find it too high, or the country may find it too high. Then they'll come back and say, well, we think this is too high, and we'll negotiate, or they're going to say something else. They're going to say, well, let's see what happens. But they always have a right not to do it. So they can say, well, we don't want it, so we're not going to shop there. We're not going to shop in the store of America. We have something that nobody else has, and that's the American consumer. And I had the most successful 4-year period in the history of this country, and I think we're going to blow it away this time. But there is a little bit of a transition, and we're going to have that little transition, and it's not much of a transition. If you look right now, we're getting 25% on cars, right? We're getting 25% on steel. We're getting 25% on aluminum. We're going to have some other things that we're going to be adding in the not too distant future because we want them to be made here. The medicines, the drugs, pharmaceuticals are going to be done, and computer chips, et cetera, et cetera. And because of that, we have the biggest computer companies in the world coming in from Taiwan and other places, and they're building in Arizona and lots of other places. We're number one in AI by far. We're leading China by a lot, by tremendous amounts. We're going to supply electricity at levels never supplied before. They're going to build their own electric. We're going to let them become a utility, essentially. And it's going to be amazing for the country. They're going to build their own electric plants. We have to double up our electricity to remain number one in AI. We're going to have to double up our electricity take our whole country. We're going to have to double up our electricity. Think of that. And probably even triple it up. And we're going to let them build their own electric plants with their plant that they're building for the AI or whatever they're doing. Never been done before. We're going to get them quick approvals. It's going to be very clean, going to be very nice. And we're going to get them very fast approvals. And people are investing in this country like they've never invested before. Thank you very much, everybody.
Thank you, Press.
Thank you, Press.
Thank you, Press. Thank you. We're headed out. Thanks, guys.
All right, everybody, you've been listening to President Trump speaking once again from the Oval Office. A lot on tariffs, commenting how the market may react to future tariffs. Also saying that if we don't make a deal, we're going to set a tariff. Deals over the next 3 to 4 weeks. So again, kind of reiterating some of what we heard yesterday. Talked about good talks with Mexico. China would like to see us do the deal that we have. In terms of TikTok, he talked about. So they did get into some of the major issues that have certainly been front and center.
He reiterated pharma tariff threat. He reiterates tariffs on cars, steel, and aluminum, and computer chips tariff threat.
And he did say we're going to have a deal with China. So and he said it's pretty obvious that President Xi has reached out directly. So a lot of headlines. If you missed any of them, please feel free to head to the Bloomberg and check it out.
Hey, speaking of tariffs, Carol Masser.
We've got a good guest to talk about this.
As we reported earlier, the EU is working on a proposal to introduce restrictions on some exports to the U.S. as a possible retaliatory tactic in the expansive trade war that President Trump initiated last month. I think a lot of people are hoping, well, I hope wine is not included.
Well, let's see what our next guest has to say. Back with us is Mandy Neglitch. She's a writer, a consultant, an expert in beer, wine, and food, has the certifications to prove it. She is a certified taster. She's also the author of How to Taste, a Guide to Discovering Flavor and Savoring Life. We have a few wine bottles, which we all need on this Thursday. Mandy, good to have you here. Thank you for listening through the president's comments. He's talking a lot about tariffs. What are you hearing hearing from your world, whether it's beer, wine, or food, because everybody is watching what's coming out of Washington and what it might mean for their business.
Well, first of all, it's great to be back. Happy
Great to
be
have
here.
you.
Not the most exciting thing to talk about, not the most fun thing, but I think
For us, it
yeah,
For
we
tariffs?
love to talk about the wine tariffs.
well, wine. Yeah.
I think what people don't realize and what's going through the industry right now is it's not just the wine coming into the country that's tariffed, it's also every piece of the supply chain. So 60% of cork is going to be coming from Portugal. The other 20% is coming from Spain. That's getting tariffed before, it's even, if it's coming to America to make cork bottles, we're getting tariffed there. We're getting tariffed on imports. So it's not even like, oh, we're going to switch to California wine.
Right.
Glass bottles come from China, which are obviously getting tariffed like crazy. French oak barrels are essential to a lot of Napa Valley's flavor profiles. So, we're really going to see the whole supply chain get tariffed before even thinking about our French wines that we're missing out on.
In the industry in the U.S., at least, is also really struggling right now for a host of reasons. So what are you hearing from them about how they're dealing with this? Is it higher prices? Is it passing along to consumers? We had a story last week about champagne. A champagne bar in New York that's like thinking about pouring 10% less so they don't have to raise prices. Like, how are they going to do this?
Right, and what's really difficult too is things like bourbon, right? They're made in America, they're going around the world. Bourbon is being boycotted in Canada right now. They're saying we're only going to drink Canadian whiskey. I'm actually going to Canada next week for the world's 50 best bars ceremony. And some of the bourbon sponsors aren't going to be able to serve their own bourbon at these events because it's being boycotted in Canada. It can't come in. We're looking at retaliatory tariffs. So every sector is kind of dealing with it differently, right? It's whether it's figuring out new partnerships, figuring out new supply chains in the U.S., or it's pouring less, stockpiling, things like that. I think a lot of people, we're going to see people going to auctions, drinking old wine that might have been in their cellar until we get through this time.
I mean, we talk about global supply chains all the time. We talk about the auto sector and so on and so forth. I mean, that is true within this industry as well when you think about wine.
Right, definitely. And I think, also it being Earth Month, like we've been trying to think about things being more sustainable and how the industry can survive generally before even this huge wrench with all the tariffs.
It's almost 5 o'clock, Carol. Why don't we have a drink?
Tell us what we've got. We're doing a condensed version, so we appreciate the rapidity with which we are going through things, but tell us what you brought us.
Yeah, so I have 3 different very sustainable spirits. We're coming up to Earth Day. If you want your bar at home to be a little bit more sustainable, these are great options. What I was talking about with bottles is the least sustainable part of your wine, period. About 30% of the carbon footprint of any wine or spirit is coming from the bottle.
Really?
We actually have a brand new vodka new to the U.S. this week.
I thought it was water when you brought it in. And then
I wouldn't be making you drink water.
And then
at
Tim's
this
like,
time.
did you smell this?
Does not smell like water.
So if you're smelling it, though, it doesn't really smell like a typical vodka. Is there anything you're kind of picking up here?
It smells like what?
It has an edge of apple. It's actually made from Yorkshire apples in the UK. This is Dutch Barn, brand new to the US. It's Ricky Gervais is a partner in the business, and basically by using something that's natural in the UK, using something that grows, the apples, the Yorkshire apples.
That's interesting.
You're saving a lot on pesticides, a lot on water, and then if you look at this bottle, we have a brown recycled bottle here.
Right.
Which is 65% recycled glass, so that's why it's brown. You don't normally see vodka in a brown bottle, but this is reusing glass to have that kind of brown, any kind of glass can go into this mold and make the brown bottles.
Sauvignon Blanc. Let's go there.
Sauvignon Blanc, yes.
But you only got about 20 seconds.
Okay, well.
This is the fast version.
This is Sauvignon Blanc is super popular in the U.S. right now, and you can see on the back of this label, you'll see that it's a New Zealand sustainable wine. New Zealand is one of the most sustainable wine industries that we have. This Sauvignon Blanc is in a lighter bottle, again, so it costs less energy to ship it, less energy to recycle the bottle if it's recycled. In the U.S., 65% of our drinking bottles don't get recycled.
Which is terrible.
Yeah, I was just at a summit in Barcelona, and they said when they did a festival in Miami at the Paradiso Summit, they said that only 10% of drinking bottles in Miami are recycled, period.
That's
and
terrible.
It will be a million years that your bottle is in the landfill. So most of these bottles, they're in the landfill for our lifetime.
Carol, we only have 20 seconds. You gotta chug it.
We can't get to the red. We've really got to wrap up. Come back soon. You have been.
It does smell very good.
I know. It just as soon as I'm done, 30 seconds, I'm out of here. With my wine, Mandy Neglich. Thank you so much. Check out her book, How to Taste: A Guide to Discovering Flavor and Savoring Life. We always learn something, and we really. What you talked about in terms of the wine supply chain, big deal. Folks, have a good and safe evening, holiday weekend. Balance of Power is next.